That was the Central Bank of Kenya Choir. If you feel it is in your heart, please give them a round of applause. Asanteni sana for making it here. Ladies and gentlemen, thank you very much for coming and coming on time. We are close to the beginning of our program, but in case you have not had the chance to have some refreshments, or you still want a bit more to keep you going, at the back of the tent, there's an area there where there's a bit of breakfast being served or snacks. So feel free to grab something if you feel a bit peckish. But we shall be starting our program in the next few. We're just making sure that all is in order. We shall be starting that. So feel free to settle in, or if you want to grab something, feel free to grab a bite or two at the back of the tent in the area that's under service. So thank you. When the choir catches its breath, they are free to give us another bit of entertainment. But for now, let's start settling in as we come close to the start of our program.
Asante Bwana. Wakulipinga, hakika weni Mungu unatawala dunia na vilivyomo, hakume tena. Hakika tumeona watu wako umewapa mamlaka kwa jina lako Yesu. Hauna ubaguzi, wote ni sawa kwako. Umetuita Yesu tupone, hakika tumeuona mkono wako
Sifu kweli What I love about the Thou CSD system is that it has provided investors from all walks of life with a simple and easy way to invest in government securities. My name is Charlene Patiat, and I'll give you a brief demonstration of this system. To get started, you require a mobile phone, a tablet, a laptop, or any device with an internet connection. For mobile phones, the application is available for download on the App Stores.
There are certificates for investment in government securities. For investors to purchase the bearer certificates, they used to have to come to the central bank physically and buy these bearer certificates at face value. They would also have to come to the central bank to encash their interest payments and also their redemption once their securities matured. Importantly was that if these bearer certificates got lost, the investors would have to go to the police station, get a police abstract, and come and find a different way of being paid for their investments.
As an exchange, we engaged with the central bank about 13 years ago, that's back in 2009, when we decided that we have to drop this paperwork when people are buying and selling bonds. You'll be surprised that people used to walk to CBK to confirm whether the assets are sitting in CBK. So we thought that was not tenable.
Just looking at an investor from Moyale, for example, if they held a bond, they would have to come every 6 months to collect their interest and also finally to encash their redemption.
Internally as stockbrokers, we were just shuffling papers left, right, and center. And it was just, you know, it's not unfair to call it the prehistoric days. That I think in my view is a correct analogy.
So in 2019, we actually automated the trading system together with the central bank. And what that did was to reduce the time period within which people were buying and selling bonds from a massive 12 days to about 3 days.
The Dow CSD is a systemically important central securities depository infrastructure that delivers world-class levels of registry, custodial and settlement services for both primary and secondary market operations.
When the system went live on the 31st of July this year, we've seen a lot of activity, especially from our clients as commercial banks, trying to open accounts because before account opening was very laborious, it was very manual. Now clients can do that on their own. It has eased the process of account opening and also settlement. We've seen clients being able to even being involved in the settlement process, which also enhances transparency.
What the Dow CSD has done is provided a very easy access to the platform. The onboarding process is very seamless. It can be done remotely on your mobile phone, on your computer. It also gives you visibility on portfolio investments. It gives you visibility on oncoming or forthcoming opportunities in bond trading, as well as what's going on the secondary market.
When we think of technology, we should get away from looking at the technology itself and understanding the human being and the effect of that. And the Dow CSD is first and foremost an empowerment tool. It will allow financial support at a very critical level. And having a seamless system that guarantees my return is just the perfect vehicle we want to start off with.
So for us, and from where we sit, We think it's empowering the investor directly, because an investor can be able to open an account under 10 minutes. That's completely phenomenal. Number two, worldwide, investors don't interact directly with the central bank. So we are pulling a fast in Africa, if not the world, whereby a retail investor like David, under 10 minutes, they have an account with the central bank. So we, from where we sit, believe that it's going to be impactful. One, in terms of financial inclusion and promoting the savings culture.
This is going basically to enhance and deepen the financial markets of Kenya. It's going to enhance transparency and also a lot of participation from the investing public, and also easing the process of investors trying to access the domestic debt market.
The innovation of the DAO CSD is a game changer in that respect, because it does allow you easy access to the bond market in Kenya. And as we know, the diaspora communities are very challenged because they are looking for ways of engaging and participating in economic activity back home. I couldn't think of a better way of them participating than in investing in the bond activity going on in Kenya, and particularly through the DAO CSD.
I live in Doha, in the state of Qatar. I would want to applaud the central bank for the new system, because previously we used to invest, accessing the portal was via SMS. And so for someone in the diaspora like me, it meant I had to get network, a local network, in this case Safaricom, and go through the SMS system to access my account. And that wasn't so comfortable. You can imagine when you don't have access to the Safaricom system, network and so on. But now Central Bank has come with a new system, the DAO system, that it's so user-friendly. It's a portal that you log in, and my experience has been fantastic. The system gives me what I like the most, and that is visibility of my account. The visibility at a glance, it's so reassuring. Interacting with it, you are able to really see what is upcoming, your securities at a glance. You can tell what your portfolio is at a glance, and that is good. So the new system has been really a game changer, and I'm sure it will be a reason that most Kenyans, especially diasporans, will opt to invest via central bank.
When I learned about DAO CSD, I decided to onboard, and the whole process, start to finish, took me less than half an hour. It was seamless. It was incredible. This innovation is second to none. And I commend really the developers who came up with such a seamless platform.
The DAO CSD is transforming Kenya's financial markets through improved monetary policy operations and enhanced operational efficiency in the domestic debt market.
The DAO CSD has impacted on the secondary market, and secondary market involves the secondary trading, and that is the trading of securities after issue but before maturity. And basically there are three main transactions. That's the outright sale, then there is the pledge, and then there is the transfer without the cash.
For the central bank, it will change how monetary operations are conducted. For the National Treasury and Economic Form, the way their securities are issued, stored and traded. And for the banking sector, it will expand existing custodial services and create new opportunities to operate in the financial markets through a world-class infrastructure platform.
Previously, some banks could not access cash as easily due to system inefficiencies. With the DAO CSD, however, we anticipate liquidity distribution to improve because, among other things, there is full transfer of collateral for repo transactions. This will enhance the functioning of the interbank market and boost confidence among the participants.
In terms of horizontal repo, which is a product that had been on ice in the financial market space for quite some time, we've seen it being rolled out. Now banks can participate in horizontal repos, because what the DAO CSD has enabled is a transferability of collateral, which will further enhance liquidity and also reduce the systemic risk that was hitherto not possible in the previous financial markets regime.
One of the things that we have seen, because we benchmark with some of these economies in India, they significantly save in excess of 60% of their earnings. So you know where we are. So if we grow that by around 10%, and I think this system is coming to bridge that, then I think this economy will be grown by Kenyans brick by brick.
And since Kenya is an innovative country, we wanted also to be the first one in the world to give such a system.
I'm proud to be part of the team that has delivered the DAO CSD system, which is going to transform Kenya's financial markets.
All said and done, we are very happy to be where we are because it's been around 2 years, and I must say that the end justifies the means.
I'm very proud to have been part of this project.
Welcome to the DAO CSD.
What I love about the DAO CSD system is that it has provided investors from all walks of life with a simple and easy way to invest in government securities. My name is Charlene Patiat, and I'll give you a brief demonstration of this system. To get started, you require a mobile phone, a tablet, a laptop, or any device with an internet connection. For mobile phones, the application is available for download on the app stores. For the other devices, the web application is available on the central bank website. Once you've accessed the portal, the first thing you do is click on the DAO CSD tab. This takes you to the DAO CSD Investor Portal homepage. Once here, you can do two things: create an account for new investors or access an already existing account. Once you click on Create Account, the investor is prompted to provide login details and accept legal terms. Once this is done, the investor is then ready to start registration. Depending on the profile of the investor, whether they are physical persons, legal entities, or signatories, the investor is then required to populate their biodata. These are details such as their names, their registration numbers, residence, nationality, KRA PIN, and so forth. The investor will then be prompted to provide their settlement details, either as an individual, joint account, or legal entity. The system facilitates an upload of mandatory documents, that is a registration document, KRA PIN certificate, the client's photo, board resolution for legal entities, and a tax exemption certificate where applicable. The investor's email is then validated, and this completes the process of profile creation for the investor. As part of our KYC processes, the investor's bank is required to confirm the investor's details. And once they approve, a CSD account is automatically created for the investor. The system would then notify the investor that the account has been created. Once your account is opened, you're ready to invest in government securities. This is also a very simple process. Once you click on Auctions, the securities on offer for the week are displayed. This could be treasury bills or treasury bonds with different tenors. The investor then selects the security he or she wishes to invest in and invests. The system has other functionalities. For instance, an investor can now access their statements in real time, as well as trade in the secondary market. As the central bank, we are excited and look forward to investors enjoying the benefits of the Thao CSD system.
Good morning to you. Good morning. I'd like to ask those of us who are still getting a bit of vitamins, vitamin D from the sunshine and a few other vitamins from our light breakfasts. If you're able to hear me, please start making your way into the main tent. We're about to start in the next few minutes. We just wanted to make sure that everyone who we needed is in place. And from what I've been signaled from various places, that is now happened. So if you can please make your way to the main tent. Feel free to sit anywhere except for the marked seats. And also, if you can, try and fill up the seats at the front so that those are coming in progressively fill the seats towards the back. We expect the program to be a pretty good one, and we shall take you through it in a few minutes. But effectively, as you very well know, we are doing three things in one. That is launching what you can see on screen. Good, someone has displayed it, which is a National Financial Inclusion Strategy from 2025 to 2028, the MTP IV, and the signing of the We Finance Code, and we shall tell you what all those things are as we go through our program this morning. So if you have not come into the tent and my voice is carrying over to you, please make your way to the tent, the main tent where we are. And if you're just settling in now, please feel free to sit anywhere as long as the seat is not marked. Just a few housekeeping announcements. You've obviously managed to refresh yourselves for those of you that came and we had provided that facility. In case you need any other facility, through the walkway where you came into the field, into the stadium, there are ladies and gents along that walkway, clearly marked. We shall be telling you in a few seconds. I just don't remember it offhand. The Wi-Fi connection, it is available. It's very strong, good bandwidth, where you can also follow this. We are broadcasting it online via the various platforms, YouTube and our websites. We do know that there are people who are joining us from all over the country and all over the world. So if you're one of them, please feel welcome. Our program will be starting in a few. Like I said, we just wanted to make sure that everything that we needed to be in place is in place so that we can begin smoothly. There's a few videos that you've noticed that we're playing. Please feel free to interact with them. Those are the ones about the three different documents that we are dealing with today, the MTP IV, the NFIS, and the We Finance Code. But there's also others. The one I've just interrupted was about the DAO CSD platform. So in case you haven't interacted with DAO CSD, that video is a useful one. But we also have my colleagues from the central bank just outside the stadium where you walked into. And once we are done with this process here, if you have a few minutes and you'd like to engage with them, in case you don't have a DAO CSD account, or if you do, but there's a couple of questions that you may have, including what's available right now by way of government securities, treasury bills and treasury bonds. My colleagues are there, and you'll have all the time that you need to be able to interact with them. So just a few more minutes, and for now, what we are having the ushers do is bring people into the tent. so that we can start and conduct the process smoothly. We don't expect it to take too long, but we are very thankful and grateful that you're able to take your time to be with us this morning.
individual looking to open an account on the DAO CSD, click Create Account. Proceed to type your email, unique username, password of choice, accept the terms and conditions and click Start Registration. Select physical persons under the user type and proceed to fill in your details.
What I love about the thousands is that it has provided and I'll give you a brief demonstration of this system. To get started, you require a mobile phone, a tablet, a laptop, or any device with an internet connection. For mobile phones, the application is available for download on the app stores. For the other devices, the web application is available on the Central Bank website. Once you've accessed the portal, the first thing you do is click on the DAO CSD tab. This takes you to the DAO CSD Investor Portal homepage. Once here, you can do two things: create account for new investors or access an already existing account. Once you click on Create Account, the investor is prompted to provide login details and accept legal terms. Once this is done, the investor is then ready to start registration. Depending
Around the world, women entrepreneurs are missing out on finance. But finance is also missing out on women. Women-led businesses are better borrowers, hire other women, invest in their communities. But systemically, financial institutions are underinvesting in women entrepreneurs because they lack the structures or data to understand their potential, or the products and services to unlock it. The financial sector needs systemic change. Multiple actors in the supporting ecosystem, from regulators to investors, all have a role to play, but can only do so if financial institutions take direct action. Welcome, the Women Entrepreneurs Finance Code, or WE Finance Code. The code is a commitment by organizations to improve access for women entrepreneurs to tools, resources, and financing. To commit is for an organization to assign leaders as champions for women entrepreneurs, collect and leverage data, and take action to bridge the gender gap in finance. Committing to the above enables the organization to spark tailored innovations for women entrepreneurs. The code catalyzes impact by bringing the ecosystem together, igniting collaborations at both country and global levels through a leaders community, peer learning, and shared knowledge. Women entrepreneurs can unlock an untapped growth market. The world can't afford not to close the gender finance gap. Be part of collective action. Be part of a systems change.
The We Finance Code in Kenya, where FSD is coordinating, it's about collaborating with the people and organizations that truly move the needle for women-led and women-owned MSMEs through the data. At FSD Kenya, our goal is to support the development of a financial system that delivers value for a green, inclusive, digital economy while improving the financial health and capability of women-owned MSMEs. Within the research team, our focus is on ensuring that relevant data is produced, shared, and copied to design solutions and have an impact in supporting the lives of vulnerable women and their businesses. The We Finance Code offers a powerful global framework for this, aligning different efforts to serve women through both financial and non-financial support, and bringing together policy, financial service providers, investors, and other industry stakeholders to leverage data in designing effective responses to serve WMSMEs. Through the code, we tap into global lessons and adapt them to the Kenyan context. I am inspired every day by the incredible champions I work with, all passionate about using data to transform opportunities for WMSMEs. Together, we are not just talking about change, we are making it happen. We want all the ecosystem actors serving MSMEs to join the collaboration. We've been hearing a lot about MSMEs being served, but we're knowing the solutions are not reaching the targeted women. So this opportunity of the code will help us bring all the data that gives us a better understanding of the needs of the women MSMEs, and through that we'll have better solutions to serve them so that the businesses can be more resilient because they're using solutions that fit their needs.
Women-led businesses are the backbone of our economy in Kenya and in Africa, because data has shown that they are actually better borrowers. Even though they are better borrowers, they continue to face significant setbacks. The We Finance Code Kenya chapter is here to change that. Women MSMEs in Kenya face barriers to finance, even though women produce about 60% to 80% of food in the sub-Saharan Africa. Enhancing women's financial inclusion has a multiplier effect, which is actually leading to improved household welfare and national economic resilience. The We Finance Code provides a structured framework to address these disparities and also promote inclusive growth by providing solutions. So the We Finance Code is an initiative to support women entrepreneurs. This includes women-led businesses and women-owned businesses. It is supposed to help them and facilitate them in terms of financial inclusion. This includes helping to create products that are more sufficient for women businesses. If we look around, financial institutions have always created products that are not in line with women. So the code will bring together all the stakeholders of the ecosystem to see what the problem is and to provide solutions to the problem in order for women to actually thrive.
The Association of Microfinance Institutions Kenya is a member-based organization where we currently have over 70 members. Majority of our institutions are really serving women, but that information or that numbers are not being captured, and the capturing is not consistent. The We Finance Code is more than just a framework, and it's a commitment to seeing women thrive. For microfinance institution, it offers a simple but powerful step to understand women's unique needs, design products that work for them, and create an environment where they feel valued and supported. It helps MFIs use data, training, and partnership to reach women who are often left out, from the rural entrepreneurs to women running small businesses in our towns and cities. When women have access to right financial tools, they grow their businesses, support their families, and strengthen their communities. That's what We Finance Code is about: breaking barriers, creating opportunities, and helping close the financial inclusion gap, one empowered woman at a time. The message I have for women-led enterprises is that with the agenda that we are driving through We Finance Code, we will be able to develop and tailor-make products that are uniquely developed to target women and have products that make you valued within the ecosystem, within the microfinance space.
Globally and across sub-Saharan Africa, governments and financial service providers are recognizing the critical role that SMEs, and specifically women SMEs, can play when it comes to catalyzing economic growth. So just looking at Kenya, for example, out of all registered businesses, 36% of them are women-owned or women-led. So there's an increasing need and urgency to support women-owned businesses. And you'll see that there's interventions around addressing barriers, systemic barriers for supporting these women SMEs. Some of these interventions, the way they're designed, don't look at the nature of women. And so our goal really is to support investors, FSPs, and BDS service providers, or business development service providers, to just start looking at women differently, understanding women and their nature, and then building out or designing products that are better suited. One of the ways we are doing this is through the WIFI code, which looks at segmenting women better and also just getting the flow of capital to women at different growth stages.
CS Kenya is a member-based association that brings together credit information providers, specifically lenders who are sharing credit information with the credit reference bureaus in Kenya. Earlier in the year, we conducted research on MSMEs, and what came to the fore from the data that we were looking at, which was largely focusing on commercial banks and microfinance institutions, was that women access, in terms of credit, they are accessing about a third of the total disbursements that are made in the country. So for the We Finance Code, the beauty about it is that it brings greater focus to women-led and managed enterprises. At times, there's not much information on women borrowers, depending on the sector that they're operating in, whether they do have collateral or not. And therefore, with these sex disaggregated data, it will give or enable financial institutions to be able to, in a granular manner, understand the risk profiles of women, and thereby enabling banks and other financial institutions to curate products that best suit women and also support those who are in marginalized sectors or environments. This is a timely initiative, and therefore this data will actually give the financial institutions the much needed confidence in terms of reliability of the scores, for instance, to be able to support women-led and managed enterprises.
Kenya Bankers Association is the umbrella body for representing banks and microfinance banks that are regulated by the Central Bank of Kenya. Our mission is to promote reliable and professional banking sector that provides the best financial services to Kenyans who entrust our member banks with their hard-earned resources. As the Kenya Bankers Association, we intend to take a data-driven approach to help our member banks translate WIFI code commitments into measurable actions. So first, we are building an industry-wide gender disaggregated dashboard. This is in partnership with Metropole, CRB, with support from FSD Kenya. This tool will aggregate CRB data from banks, microfinance banks, SACCOs, and digital lenders. The dashboard will provide monthly insights into lending volumes, credit performance, and any other market gaps that might exist. Besides gender, the dashboard will also be segmented by industry sector, region, credit score, and other loan characteristics. So it will enable each bank to track its own progress, set targets, and also benchmark against peers. Secondly, we'll use knowledge gained from the dashboards to offer capacity building programs. This will strengthen our members' ability to design and implement gender-sensitive financial products. So this way, KBA will turn the WIFI code commitments into real measurable results that will increase financing for women entrepreneurs and support growth in the MSME sector as a whole.
Currently, we are consulting for FSD Kenya on 2 work streams. Firstly, the launch of We Finance Code Kenya chapter, and secondly, on sex disaggregated data through building a supply-side national dashboard.
So, ladies and gentlemen, it gives me great pleasure to welcome our chief guest. That is a cabinet secretary in the National Treasury and Planning, accompanied by the governor of the central bank, the principal secretary, and other guests. Let's welcome them with a round of applause. Karibuni sana, and to our guests, thank you very much, and thank you for your patience. We are here this morning to carry out some rather interesting and important things. And so before we begin, I'll ask all of us to be on our feet if you're able to. Please stand up. And we shall have the national anthem, followed as we usually do by the East African anthem.
Tuwezeshe
You may take your seats. And the challenge, as we always have in this, is how many can sing the East African anthem from the top of their heads. That is your challenge for the month of December. I will ask Ada to join me. So as we said, we're here this morning to carry out three important functions simultaneously. That is a launch of the National Financial Inclusion Strategy, the MTP IV for the financial sector, and the We Finance Code. So that's what we will do this morning, a very smooth, very elegant program that we hope we're able to do this in a way that serves the people of Kenya. We are going to carry this out not in more than an hour and a half, 2 hours, and we'll be looking at how to conclude this well. As we said, we are joined by audiences not just here in this room and not just here in this country, but all over the world. We are broadcasting live on the various platforms. So if you're joining us from wherever it is that you are, welcome. If you're in this room, karibuni sana. And we do hope that you're able to help us witness and drive this process forward.
Thank you very much, Wallace. As he said, my name is Ada, and in the spirit of financial inclusion, he has decided to include me here. So we would like to invoke the divine blessings and commence our program. So I would like to invite our somebody to take us through the opening prayer, Mr. George Amolo from the Central Bank of Kenya. Please welcome.
May I request that we be upstanding. Our Heavenly Father, mighty God, the King of Kings and the Lord of Lords, the one who was, is, and shall be forevermore, we come before you this morning with our hearts full of gratitude for the gift of life that you've granted unto us as a people, as a nation, as individuals, as families. We pray, mighty God, that your divine guidance may abide with us today, even as we ask, Almighty God, with thanksgiving in our hearts for bringing us all the way from January to November to December now, King of Glory. It is not by our strength or by anything that we could do on our own self, mighty God, that we have been able to see the end of the year. We thank you and we give you all the glory. We ask, O Lord our God, for your covenant of peace, Almighty God, to remain in the nation of Kenya, that will culminate into all-round peace for this nation, King of Glory. We ask you, King of Glory, that you may abide with us, Almighty God, and send us help that will give us progress and the development of this nation. We sincerely want to thank you, mighty God, for the wisdom that you've granted unto everyone, every stakeholder, the people that went through into making this day a success, Almighty God. To you alone be all the glory and honor. We bless you, King of Glory, for our president. We thank you for the cabinet. We thank you for all the 47 counties, Almighty God, that you may continue to grant them wisdom in everything they do, King of Glory, for the benefit of this nation. We give you glory and honor. We want to thank you for the Central Bank of Kenya. We want to thank you for the National Treasury. We want to thank you for all the stakeholders that were involved in all this process, King of Glory. And we ask for your presence to abide with us, King of Glory, all through this meeting this day. To you alone be all the glory and honor. Bless us, Almighty God, with wisdom, Almighty Father, that will make this day a glorious success. To you alone be the praise and honor. We thank you and we bless you. For this is our prayer with thanksgiving in Jesus' mighty name. Amen.
Thank you very much, Mr. Amolo. And now we have the pleasure of being entertained by the Central Bank of Kenya staff choir, who will be taking us through a song titled Our Strategy. If you have this pamphlet, it's on the second page of the pamphlet. You're free to join them.
You know, the central bank, our strategy is in a document, it's on the website, and it's in song. So thank you very much to the Central Bank of Kenya Choir. Another round of applause. I think they've been entertaining us not just now, but since we came in. Asanteni sana. It now gives me a great honor and pleasure to invite and introduce and welcome the Deputy Governor of the Central Bank of Kenya, Mr. Gerald Nyauma.
Cabinet Secretary, the National Treasury and Planning, Honorable John Buddy, other Cabinet Secretaries present, Principal Secretary, the National Treasury, Dr. Chris Kipto, other Principal Secretaries present, Governor of the Central Bank of Kenya, Dr. Kamau Thuge, Deputy Governor, Central Bank of Kenya, Dr. Susan Koech, members of the CBK Board of Directors, members of the CBK Monetary Policy Committee, CEOs from the Joint Financial Sector Regulatories Forum, CEO FSD Kenya, and CEOs from the private sector bodies, banks, mobile money providers, microfinance institutions, and SACCOs, representatives from the Central Bank of Nigeria and Bank of Tanzania joining us virtually, representatives from ministries, departments, agencies, and development partners, staff of the Central Bank of Kenya, distinguished guests, ladies and gentlemen, including those joining us virtually, good morning. Cabinet Secretary, distinguished guests, on behalf of the board, management, and staff of the Central Bank of Kenya, it gives me great pleasure to welcome you to the Central Bank of Kenya Institute of Monetary Studies. We are gathered here today for the simultaneous launch of Kenya's National Financial Inclusion 2025-2028, the MTP IV Financial Services Sector Plan 2023 to 2027, and the signing of the Women Entrepreneurs Finance Code. This convergence of three transformative frameworks is not coincidental. It represents Kenya's deliberate and coordinated approach to building an inclusive, resilient, and prosperous financial system that serves every Kenyan. Cabinet Secretary, distinguished guests, from the outset, allow me to recognize and acknowledge the partners that have been instrumental in supporting us for the event that we are privileged to host today. There are many institutions, partners, and stakeholders led by the National Treasury and Economic Planning, the Ministry of Gender, Culture, Arts, and Social Services, the Ministry of Cooperatives and MSME Development, Kenya National Bureau of Statistics, and closer home, the domestic financial sector, regulators working under the auspices of the Joint Financial Sector Regulators Forum. In addition, CBK and our partners have benefited immensely from a wide range of stakeholders, both public, private sector, and development partners, in the journey that has enabled us to finalize the frameworks being unveiled and signed today. This includes institutions such as Agriculture Finance Corporation, Kenya Bankers Association, Association of the Microfinance Institutions, the World Bank, Women World Banking, GIZ Kenya, the Gideas Foundation, Alliance for Financial Inclusion, National Securities Exchange, County Pension Fund, KCB Bank, Cooperative Bank, Family Bank, CIS Kenya, Metropole CRB, Credit Info, CRB, Tala, M-Kopa, Caritas, Microfinance Bank, and last but not least, the Financial Sector Deepening Trust Kenya, who have been a long-standing partner for both the CBK and many of the stakeholders gathered here today. Cabinet Secretary, ladies and gentlemen, there are many other players and stakeholders who have been instrumental in the work we are launching. This makes today's event a true embodiment of the African proverb, if you want to go fast, go alone. If you want to go far, go together. Only through partnership and collaboration will we be able to realize a better and prosperous Kenya in line with the government's transformation agenda. Cabinet Secretary, ladies and gentlemen, as I conclude, allow me to say that for us at the Central Bank, it gives us even more honor to host this event at the CBK IMS. Recently, what was known as the Kenya School of Monetary Studies was renamed to the Central Bank of Kenya Institute of Monetary Studies. CBK IMS is now well positioned to build on its strong foundation, offering best-in-class training and capacity building for the financial sector in Kenya and beyond. Cabinet Secretary, distinguished guests, with these few remarks, it gives me great pleasure to once again welcome you all to the CBK-IMS for today's launching and signing events. Karibuni sana and thank you.
Thank you very much, Bona DG. Now, as we said, what we're launching and as a DG has outlined is 3 documents. And they're more than documents, they're actually strategies for taking the financial sector in Kenya, and we can even dare to say regionally, to the next level. So what we want to do is ask you to have your eyes on the screen. If you're online, we will be displaying it in a few seconds. We will have 3 presentations. We shall begin with the National Treasury that will take us through the MTP IV for the financial sector. We shall have that presentation done just now. So karibu sana, Bwana Director, who will take us through this, followed by the other 2, and we shall introduce them in due course. Karibu.
Our Cabinet Secretary, National Treasury. It's much easier. Principal Secretary, National Treasury, Dr. Chris Kipto. Central Bank Governor, Dr. Kamau Zuke. The Deputy Governors, Dr. Susan Koech and Nyaoma. Allow me to ride on the already established protocol as I make this presentation on behalf of the National Treasury. I present to you the FSS Plan 2023-2027, a joint output of all of us who are seated here, the regulators and the development partners. So this presentation will have an introduction. We already have a few achievements, Cabinet Secretary. As we go through this, we've already had some achievements. The impact and challenges, of course, programs and projects. In other words, what are we focusing on going forward? What are the policy and legal reforms that we shall be undertaking? The Financial Sector Service Plan was identified as one of the 8 priority sectors under Vision 2030. And I'm happy that our colleague from the economic planning is in our midst. So this is one of our 8 pillars of the Vision 2030. FSS Plan 2023-2027 is a successor of the previous plan which we implemented. The vision is to create a vibrant and a globally competitive financial sector that will promote high levels of savings and finance for Kenya's investment needs. If you look at what our president is saying, we need to have high levels of savings. And this plan, therefore, is part of that strategy. It is well anchored in the bottom-up economic transformation agenda, which all of you must now appreciate as a key development program for us and is a key enabler for social economic development, particularly facilitating access to finance to our people in our every place. So the previous plan was achieved the following milestone, Cabinet Secretary. The previous plan achieved the following milestone. Number 1, strengthening of legal reforms and building infrastructure to support electronic payments and embracing digital financial services. You can appreciate that this is one of the things Kenya is known for. The other one is regulating digital credit providers. At one point, there was hue and cry on the market, in which case this became an important aspect to deliver regulation. And as we speak today, we can appreciate that the market has calmed in terms of the complaints, and we must appreciate the central bank. Expansion of mobile money interoperability. The fact that money can move from Airtel to Safaricom is part of the reforms that we are able to deliver under this additional national payment strategy, which we have been delivering. And Cabinet Secretary, we have already commenced together with the CBK the development of a new policy and a new legal regime under this payment system. Deepening of financial markets, including the Kenya National Multi-Commodities Exchange, COMEX, introduction of Ibuka and listed security platforms for Nairobi Securities Exchange. This is to allow many Kenyans to participate in our NSE. Development of green bond regulation paved the way for the issuance of the Kenya's first green bond. We are alive to the fact that there's climate change and whatever. But the most other one that is critical for the economy, which is a pillar under the bottom-up economic agenda, is the inclusion of MSMEs. And we are currently working on a guarantee together with you and other stakeholders. I'm happy that I've met some of the banks implementing this, even in this forum. Then establishment of Kenya National Entrepreneur Saving Trust to allow those at the bottom of the economy to have some safety net going forward. Increase of SACCO from Kenya shillings of 443 billions to 816. So our SACCO is developing and growing. Increase of unclaimed financial assets, and the team is also planning to develop a policy around this area. Development of the National Green Climate Finance Strategy and establishment of Nairobi International Financial Center, positioning Kenya as a financial hub. This reform has begun to progress, and we are working on this. Broadening of the financial inclusion. We have also diversification of the financial market, increased stability and trust. For us to use our financial services, there must be stability and trust in our financial services. And then supporting economic growth and resilience. Allow me to move fast and just talk about a few challenges that we have noted, which then are addressed in the current strategy. Financial inclusion gaps by gender and region. And today we'll be signing a code that is important to deliver this. Limited access of affordable finance to MSME youth and women. The informality of our MSMEs, and that's why the PSMSME is part of this. Then we have digital risks and cybersecurity, fraud and data privacy. And then high credit and other financial transaction costs, and then low savings as per when you look at the relative to GDP. The 2023 plan has the following goals: to deepen access to all financial services, including insurance services. We still are way below, I think below 3%. So we want to deepen that efficiency and stability and integrity of our financial services, enhancing financial literacy and consumer protection. And then, of course, mobilize high levels of savings and investment for our people. What are the programs that we are implementing under this plan, Cabinet Secretary? We are implementing the following programs. Number one, development of the National Financial Inclusion Strategy. And I'm happy that part of what we are launching is what we have already delivered. This one. The virtual assets and ecosystem. Cabinet Secretary and Principal Secretary, thank you so much for leading us to develop the virtual asset policy and law. And our team is already meeting to do regulations for this sector so that we can allow virtual assets to thrive in our economy. Establishment of the Kenya Credit Guarantee Company, which is work going on in our treasury together with Central Bank of Kenya. We are strengthening the Green Finance Program with our team at the National Treasury and the other players on the market. The development of the Nairobi Financial International Center, and then promoting long-term saving through pensions and insurance, which includes what we are doing under KNEST to bring on board those at the lowest of the pyramid. And then operationalization of the SACCO shared services and central liquidity facility. I see the CEO of SACCO is in our midst. This is one of the reforms which we are doing under this plan. What are the policy and institutional reforms that we look ahead for? We're looking at the following policy reforms. Number one, insurance policy to promote access and penetration I earlier on said that we still are way below, and we want to move this to a higher number. I want to report that this policy is already at cabinet. So when you are conversing and maybe talking to cabinet, it's important for us to progress it. We also have identified a gap in the public sector transport insurance. And through consultation of our stakeholders, we have developed a report. That report, we have done a CAB memo. The CAB memo is with the Attorney General for it to be progressed to the next level. We have begun working with our teams on the macroprudential policy to promote stability in the financial systems. This is important for us. The ultimate responsibility of a systemic crisis in the economy and the financial sector is with the Cabinet Secretary. So it's important for us to develop a framework to handle this. And I'm happy the regulators have come together. We have already developed a draft. Early next year, we will commence to develop the framework, and probably as the year progresses, we should be able to have that policy. We are looking at doing a policy on unclaimed financial assets to just deepen this reform. And then disaster risk financing strategy. When Kenya gets into a number of disasters that go over and beyond even drought, so we need a strategy to deliver this and be able to do this. Then review of the subsector legal reforms, frameworks, and then establishment of the Kenya Credit Guarantee Company. We are working closely with World Bank, and I saw the team from World Bank in the room, to deliver this reform. This is one of the biggest reform we need to deliver, Bwana CS. And we're working very closely with the. It is worth noting that as we launch this plan, a number of achievements have already been done, so that we are not just launching and waiting to deliver. It's not just a booklet you will be launching. We are doing something. Number one, we have the national policy on virtual asset and virtual asset service providers that have been approved by Cabinet. We already have the act signed into law by the President. CBK has registered 126 digital credit providers by June 2025, a very good reform to ensure that the market is properly managed. Launched the Law Central Security Depository in September to deliver simple and secure, efficient process of investors so that all Kenyan investors have an access to this. Of course, credit guarantee policy, as I already said, has already been passed by Cabinet. The Central Bank Act was also amended to allow CBK to regulate all guarantees. So we are working on how to deliver this. And then establishment of the Rural Guarantee Scheme, which is already going on at the National Treasury. Progress for implementation of SSC, enactment of key regulation to support the retirement benefits subsector. RBA is also part of what we are doing. We also have the National Retirement Benefit Policy, which was launched, and you are part of the launch. And then enhancing of the depositor protection through implementation of a risk profile framework. And we are working closely with IRA on this reform. So in conclusion, to foster successful implementation of the plan, TNT together with stakeholders will promote collaboration and partnership. I want to report, Cabinet Secretary, that we have worked very closely with the stakeholders on the market, the regulators. We have a very harmonious working relationship. Even the associations, Kenya Bank Association, we need to mobilize a pool of resources and capabilities. We need to enhance coordination and reduce duplication in the FSS plan. We need to strengthen accountability. We need to facilitate knowledge sharing, and then enhance sustainable intervention to strengthen stakeholder buy-in so that we engage them all along. The other pillar that we will be focusing on is M&E. And we are working together with the regulators. When we were implementing FSS plan number 3, they used to report on a quarterly basis. We will be working together with our team to agree how do they report on progress so that by the time the plan ends, we are able to deliver a report. Allow me to really appreciate yourself, Cabinet Secretary John Mbadi, my PS, Dr. Chris Kiptong, my DG in absentia, Albert Mwenda, colleagues from the National Treasury, together with all the financial sector regulators. We have developed this plan together, and I cannot forget FST Kenya, Tamara Cook, who has been a strong support. This morning, she was sharing with me a picture of my presentation, which I did in 2022 on this aspect, and I was just happy that she could keep such records. So thank you, Cabinet Secretary. This is the plan you'll be launching. There will be booklets that are available for to be shared with us. But the most important part is for us to track implementation. So every time you see me doing a memo about one of these items, you should know that it is within this plan and is within the bottom-up economic transformation agenda. Allow me to thank you so much. Thank you, Welles, and you can proceed. Asanteni sana, Mungu awabariki.
Asante sana, Director. Well, I move slightly aside for the next presentation to be loaded. Just a note that as we launch these three, we will be sharing them in physical copy, but you're also uploading them in a place where you can take them in soft copy. And also, if you're joining us, not to forget people joining us online, we will be letting you know where this can be taken from. As well as that is the presentations themselves, because they're quite useful, containing succinct information about the different documents. Those will also be available for download, and you can interact with them as you wish. And don't forget that all the people involved in the development of the MTP IV for the FSS, in the NFIS, and also in the We Finance Code are all here in this building. So we are able to interact with them also in case you want further information, seek partnerships, and all the rest. So now I'd like to invite a colleague of mine from the Central Bank of Kenya, Dr. Isaac Mwangi, who has been spending sleepless nights literally coordinating the process of putting the National Financial Inclusion Strategy together. But we wanted to give us just a few highlights of that process and what is in the NFIS. Isaac, Dr. Mwangi, karibu.
Yeah, thank you very much. Cabinet Secretary, TNT, all protocols observed. Allow me to ride on that to make this presentation. I'm making this presentation on behalf of virtually everyone who's seated here. This is a document that has benefited immensely from all of us seated here, the joint financial sector regulators, the National Treasury, Central Bank of Kenya, development partners, both public and private sector. And why I'm saying this is because this was also subjected to public participation, and therefore we have been able to benefit immensely from the feedback. So mine is to just present what the Kenyans' wishes are, and allow me to introduce this subject. It's a journey we started a few years back. And the motivation of this was actually articulated very well same time last year when we were seated launching the National Fin Access Survey. And that Fin Access Survey singled out a few challenges that were characterizing the Kenyan populace in terms of access to and usage of financial services and products. And what we noted from the Fin Access Survey is that the gaps in financial inclusion were growing, and what we established particularly is that there were huge disparities despite the growth in financial inclusion at the national level, averaging 84.8%, the level of financial health, and that is measured by the ability to meet your day-to-day needs, your ability to cope with risks, and even to invest in the future, was found to be approximately 18.3%. So that tells us that despite the growth in financial inclusion, you find that the nexus between financial inclusion and financial health, there is something that needs to be addressed, and those are the gaps that we singled out. One of the things, again, that we mentioned in the report was the issue of financial literacy. We observed that there are huge gaps in terms of financial literacy, and that, again, is looked at across all population segments. You again go further and look at the uptake of financial products and services. You find that there are disparities by gender, by residence, by county, and those are the things that we wanted to address in this strategy. So allow me to move and present this national financial inclusion strategy, which is the first in the country. We have compared ourselves with countries in the region, and we noted that we have been lagging behind, given that Uganda, Tanzania, Rwanda, Nigeria are in their second and third national financial inclusion strategies. But for us, it's a first. So it's something that we need to be proud and celebrate that we have found ourselves and we've been able to come this far. But what is this National Financial Inclusion Strategy? So the National Financial Inclusion Strategy talks about a roadmap, rather is a framework, and I want to commend the earlier speaker, because this is one of the programs in the MTP program. You realize that we needed to coordinate our efforts. If you look at the way we are structured in the financial sector, both private and public, you find there is a lot of fragmentation in terms of the approaches we follow to enhance financial inclusion. You also find in some instances there is duplication of efforts, and that creates inefficiency in the way we address the gaps and the financial exclusion. So ladies and gentlemen, this National Financial Inclusion Strategy allows us a perfect opportunity for us to coordinate our efforts in terms of bringing our coming together in order to enhance access to usage, quality, and affordable financial services and products that meet consumer needs and are delivered in a sustainable way so that they can be able to address the gaps. So the vision of this is actually founded on those 4 dimensions of financial inclusion: the dimension of access, the dimension of usage, quality, and impact. And that is the ultimate end, because we're in the last mile of financial inclusion, but we also need to look at the first mile of financial health, which is still at 18.3%. So this provides that framework, and that is a mission. And when we look at this again, we ask ourselves, what do we intend to do at the end of the day? One is to provide a platform, and this will enhance close collaboration, coordination, and cooperation among stakeholders. We also seek to minimize duplication of efforts and ensure that there is efficient utilization of resources in undertaking financial inclusion. Ladies and gentlemen, we also look at the vast innovations that are coming up. We've been told about VASPs, and we also have so many, including the digital credit provision. So there are quite a number of innovations, ladies and gentlemen, that need to be focused in terms of policy, in terms of attention, so that we ensure that we have a focused approach to enhancing financial inclusion. The strategy also provides us with a broad range of financial services, and this includes all the entire ecosystem, be it savings, be it insurance, be it capital markets, payment platforms. So we would want to look at all those financial services and ensure that we have a coordinated approach in terms of the way we push the reforms in the sector. Lastly, as I mentioned earlier, is the need to ensure that we articulate the 4 dimensions of financial inclusion, and that is access, as mentioned earlier, and that talks about the proximity to the financial outlets, the actual usage of products and services, where we noticed that there are serious gaps when you go to the regions, you go to counties, you go to gender, you will see those disparities. But what about the quality? Those are other aspects that we're interested in, not forgetting the vulnerable groups. Ladies and gentlemen, the National Financial Inclusion Strategy, and this is again a highly summarized version. We'll be able to share with you the detailed reports after this, once they are officially launched. We organized the National Financial Inclusion Strategy along 6 pillars, ladies and gentlemen. And the first one was the need to deepen the access. And again, this is organized along the 4 dimensions of financial inclusion. So the second pillar, ladies and gentlemen, talks about the usage. Then we move to issues of responsible financing, where we talk about market conduct, we talk about financial literacy, and we talk about consumer protection issues. Not forgetting that in the 4th pillar, we now focus on the greening of the ecosystems. So we find that there are also green finance products that need to be pushed to the wananchi. So the 4th pillar, ladies and gentlemen, talks about the need to enhance inclusive green finance for the especially financial services sector. Fifth, we talk about the need to focus on the rural population. Most of our rural population are actually focused on agriculture. So we would want to support the farmers by enhancing access to credit for farmers. And this is again covered in pillar number 5. And when you look at the robust MTP for the financial service sector, there is a detailed section that talks about enhancing agriculture for the rural farmers. And lastly, we talk about the vulnerable groups. And the vision of this NFIS is to leverage on financial literacy to enhance financial inclusion and financial health. But the overriding principle is ensuring that we leave no one behind. And that informs the last pillar that talks about access to financial services for the vulnerable groups. And here we lump together women, youth, persons with disabilities, and even refugees who probably are displaced by famine, drought, among other things. What are some of the gaps? So there are quite a number of gaps that we have identified together with the development partners, the public and the private sector, and we've tried to focus on just a few. Again, the details are in the report. I'll just mention a few in the interest of time. So the first one is to deepen the penetration of access to financial. But what do we need to address? Again, one thing that came out in the FinAccess survey, and that report is still available on our website, you'll find that access to financial services is actually hampered largely by the lack of eligibility issues. And one of the things that we singled out was the issue of ID ownership. Those are the things that allow you to start interacting with the financial ecosystem. So in the absence of a national ID, then it becomes very difficult for you to interact with the financial system. So those are some of the gaps. Again, when you look at the functioning of this strategy and the operationalization, the governance structure, you find that part of the National Financial Inclusion Council are those agencies that are responsible for the issuance of IDs and stuff like that. So the issue of access infrastructure, these are areas that need to be enhanced to ensure that we leave no one behind at the end of the day. When we move to the actual usage, here we talk about issues of frequency. What is your interaction with these financial services? So we talk about frequency, we talk about the duration, and you may find that there are people who interact with these financial products and services virtually every day, but for some other product, it is on a monthly basis because of the way our salaries are structured. But what do we need to address in this area? One of the things that we are addressing in this strategy is the issue of affordability. So, ladies and gentlemen, we would want to enhance the actual usage of financial products and services by ensuring that the products and services that are issued to the market are actually tailor-made to meet consumer needs. Issues of transaction costs. This one is something that, again, is raised, and it came strongly when we were engaging the public in the public participation. They talked about the issues of trust, lack of tailored offerings. Those are some of the gaps we'll look at. But when we move to the promotion of responsible financing, and that is in the pillar 3, we aspire to push financial literacy metrics. At the moment, when we were measuring financial literacy, we noted that 42.5% of the population are considered to be highly financially literate. So that tells us that over 50% will be classified as not highly financially literate. And that we look at it along the measures of your ability to compute the cost of funds. And that is as given by the interest rate. You look at the issue of the risk diversification. Are you able to invest in a portfolio of financial products and services, or you'd prefer to deal with one portfolio? Because that helps you to understand the issue of risk diversification. The last item that we looked at in the measure of financial literacy is the aspect of the cost of funds. Are you able to understand how much 500 shillings today would be worth a year back? So those are the things, again, we look at when we want to enhance financial literacy through the third pillar of responsible finance. And this, again, our chief guest, we also speaks to the issue of gambling. Gambling is one area where we've noted our youth, actually more than 10% of our population, of our adult population, consider gambling to be a good source of income. And that tells you that there are quite a good number of people who focus on other mechanisms to try to break even. So those are some of the things we would want to address. Again, the weak consumer protection issues that undermine financial health. So those are areas we want to focus on. When it comes to the greening of the environment, again, we would want to expand. The central bank already published establish the Kenya National the framework governing the greening of the environment, and we would want to push this to the entire ecosystem so that even all the financial sector regulators are able to have that green finance taxonomy. And that's why we are saying it is still at the nascent stages, but we would want to push it to ensure that we green our environment, and even our MSMEs are able to enjoy green and tailored products. Second last is the issue of rural agriculture finance. You understand the seasonality aspect of farming, whereby crops are subject to some crop cycles. So we'd want to tailor, and our proposal is to ensure that financial service providers are able to tailor their lending and their products to this particular sector, so that they are able to be aligned to the crop cycles. And this also goes beyond aligning them to ensuring that there is also the aspect of insurance to address issues associated with drought, famine, among other things. And lastly, as I mentioned, we would want to leave no one behind, and therefore it is our aspiration as a sector and as an industry to ensure that we enhance financial inclusion for women, and this is through addressing the persistent structural and social barriers, and this could include gender bias, limited collateral, lack of disability-friendly financial products, constraints, and other factors that affect the vulnerable groups. So as I draw closer to a close, I would want to mention that the governance structure takes care of both the private and the public sector. When we'll be rolling this out after the launch, we have proposed a structure that will govern the implementation of these plans, because most importantly is that we have come to the end of the formulation, but now we need to move to the implementation. And therefore, in terms of the governance, we have the National Financial Inclusion Council that will be providing oversight, guidance, and even policy. And this team will also provide the resources. They will help in the articulation of issues. But in terms of the actual implementation, this will be done by the Technical Coordination Committee, which will be, again, overseeing the day-to-day. They will be coordinating the formulation of the proposed ideas. It will provide technical support to the council, which is the apex body. And lastly, it will help in terms of monitoring and evaluation. And in terms of the day-to-day operations, there will be a National Financial Inclusion Secretariat, which will be domiciled by the central bank. And of course, we are happy that the chair of the council is seated right before us. That is a PS TNT. And we would want to push this agenda forward. But of course, there are many proposals that are being advanced in this document, which will be operationalized through the technical thematic working groups. And some of them are already in place. For example, the Consumer Protection Framework is already underway. Financial literacy framework is already being developed. So in terms of the implementation plan, this is a journey that we've come. And of course, after today, when we have the official unveiling of these documents, we'll move straight ahead into the implementation, our chief guest, and therefore, thereafter will be followed by the issue of monitoring and evaluation. And this strategy, ladies and gentlemen, is for the next 3 years. So by December 2028, we will do a monitoring and evaluation, and that will help us to establish whether there is need for another national financial inclusion strategy. And of course, as I mentioned at the beginning, the financial inclusion currently stands at 84.8%. In this strategy, we propose for a universal access to financial services where we leave no one behind. And how we intend to do this, and we will require a lot of support from both the public and the private sector to ensure that there is regular submission of data to help us track progress on the proposals that we have made. And this will require routine data collection, and of course, even in terms of the organs that have been established, there will be regular engagements with the council meeting twice per year, with the technical coordination committee meetings quarterly, and the National Financial Inclusion Secretariat meeting on a monthly basis. So in terms of conclusion, is just to state that the effective implementation of this National Financial Inclusion Strategy is pegged on strong coordination, prioritization, and accountability mechanisms. And secondly, this calls for a sound and effective communication strategy, a multi-pronged funding strategy, and regular reporting. Thank you, ladies and gentlemen.
Thank you very much. That's Dr. Isaac Mwangi from the Research Department of the Central Bank of Kenya. I noticed he was almost losing his voice. That is a result of the amount of work that has gone in the past few months in putting this document together. So now this other one, I need for everyone to pay close attention because you'll be surprised at how I do it. Our next presenter / speaker is Dr. Susan Koech. You notice I've not prefaced her with her title. Why? Because I'm not asking Dr. Susan Koech to come up here as a Deputy Governor of the Central Bank of Kenya. She's wearing another hat, which is a national champion for the We Finance Code. So in that respect, I would like to introduce and welcome the national champion of the We Finance Code, Dr. Susan Koech. But just because she's my boss, the Deputy Governor of the Central Bank of Kenya, Dr. Susan Koech. Karibu sana DG.
Okay. The Cabinet Secretary for National Treasury and Planning, Honorable John Badi, PS National Treasury, Dr. Chris Kipto, PS MSMEs, Susan Mangeni, the Governor of the Central Bank of Kenya, Dr. Kamau Thuke, my colleague DG Gerald Nyaoma. Allow me to ride on the already established protocols and invite you to listen to me as I take you through this presentation. From the onset, let me acknowledge the team behind this presentation who have really worked tirelessly. And I will start with my colleagues in the research department led by Professor Mudida, Chironga, and of course Isaac Mwangi, who was just speaking before me. They've spent a lot of time bringing together, the other non-state actors who were led by Tamara Cook of FSD Kenya. Thank you so much. So, ladies and gentlemen, we are here because in October 2025, the Governor of the Central Bank of Kenya allowed us, as the CBK, to be the national coordinator of the We Finance Code, and we truly want to appreciate him for that. And out of that, we are now going to bring a framework that will allow the players and many players who are here today to sign the code. And why are we going to sign the We Finance Code, especially as a country? The first thing is, which has been shown through research, is that the financial sector is missing out on women entrepreneurs. And that, out of research, studies, surveys that have been done, that there is a growing evidence of the business case for financing women MSMEs. And the next indicators, which I'm going to take you through, these are not my words or my colleagues' words. This is out of research. Out of research, it has been found that on profitability, that companies with more women in leadership roles were 21% more likely to outperform their counterparts in terms of profitability. And also that for 5 consecutive years, the average NPLs for loans to women MSMEs have been lower than total SME portfolio, and that is a survey that was done by IFC. On innovation, the Harvard Business Reviews tell us that companies with women in leadership roles were more likely to introduce new products and services. While the Credit Suisse are telling us that when you look at the risk profile, that companies with women on their boards demonstrated better risk management practices, leading to lower volatility in stock performance. Ladies and gentlemen, In terms of management, EIB Finance in Africa, they tell us that well-managed enterprises with sound management practices such as setting performance indicators and monitoring them are more likely to be led by women. However, women entrepreneurs face systemic barriers to growth. And more so, women in developing economies, like for our case, they actually aspire to be entrepreneurs at similar rate as men. But they usually face significant barriers. These significant barriers is largely because of social norms, care burdens, skills and sector selection, while also we are told that 75% of the legal rights of men and 2 times more loan rejections, which are actually, attributed to loan applications by women, and less than 2% of venture capital funding to female teams. These actually cumulatively and possibly and other reasons that barriers that have not been included here have actually led to a $1.7 trillion financing gap. And because of those barriers, this has actually set limits and made more women MSMEs not to realize their potential. We see then that only 25% of fewer women will start businesses than men, while 36% gap in growth expectation between men and women entrepreneurs actually becomes also another issue that is leading to women not meeting their full potential. Overall, $5.6 trillion is lost in value addition globally, while $1.7 trillion is lost as an opportunity, revenue opportunity lost by the financial services providers. And so, why the We Finance Code? The We Finance Code provides a multi-stakeholder initiative to expand the number and type of institutions around the world working to close the finance gaps for women entrepreneurs. And so what does the code entail? There are 3 things that we look at in the code. The first thing we look at is leadership, because once we have signed the code, then we are engaging other financial sector leaders so that together we can be able now to come up and bring those organizations, then we come up with the strategies to support women entrepreneurs. The second thing is on the data, because the systematizing the collection and analyzing and use of supply side data on financing of women-led enterprises at the country level and globally. It gives us that opportunity to have the right data. And then lastly, it also gives us an opportunity to catalyze new financial and non-financial mechanisms to meet the needs of women MSMEs and mobilize capital, improving standards, policies, and regulations to address data gaps and financing constraints. What are the characteristics of the code? 1, it is the commitment to roll out the We Finance Code nationally, which we already did, and we are going to strengthen it today, and then adapting it to the local context while retaining key minimum guidelines, because we need to understand that our context will not be the same, for instance, with the context of Ecuador or Nigeria for that matter, because I know Nigeria were among the first countries in Africa to sign the code. Secondly, is we are going to also have governance through a national coalition that oversees local adoption of the code and ensures accountability. Thirdly, we will have designated coordinator to oversee local code implementation and interface with and report to the global code, because we need to have that kind of structure. And actually, as the Central Bank of Kenya, for us to be there, then we are able to work with the state and non-state actors and represent, the country at the global scene. And then finally, it also gives us an opportunity to have a mechanism to aggregate data with integrity and in a format that will facilitate mainstreaming over time and can be reported globally. It actually will entail us having specific data sets, and also having to come up with a kind of reporting template that then will enable us to do proper monitoring and evaluation, because we realize that most financial institutions, for instance, they have so many women, I would say that products that are designed for women MSMEs. But sometimes what we've not been able to see is the traction, because then we have so many other development partners who will want to support, and they're actually represented even in this forum today. But if we have the national now coalition, then we can be able to track, we can be able to know where were we when we signed the code as Kenya, and then where are we supposed to be in the next 1 year, in the next 2 years, and how has it been impactful in terms of, how many more women-led enterprises are financially included. And just to add on what I've said, then the benefits of the We Finance Code will enable us to strengthen collection and also quality and usage of women MSME data. It will also enable us to deepen FSP's capabilities to serve the women MSME market. It will enable us to rally national ecosystem around unified cause of supporting women MSMEs. And finally, it will position Kenya and its WFI policy as best practice globally. Because what we will want to do is to position our country in a situation where we also have others learning from us. So what we are doing today will actually be used by others, those who have not been able to sign the code. And as we know, especially for Kenya, we usually will lead other countries within the region. And I'll even give the example of like what we've done at the Central Bank of Kenya, especially on our monetary policy reforms. We've had so many other central banks within the region just coming to listen to us and to see what have we been able to do, how have we been able to manage to have really efficiency in our forex interbank market. So even in this space, we expect to be able to posture our country in a way that then others can learn from us. And the beauty of all this is how the We Finance Code is aligned to the NFIS and also the MTP IV as earlier presented by Ronald from the National Treasury. So underlining this, and you must have listened to my colleague, Dr. Mwangi, the NFIS Pillar 6, which talks about, us looking at the vulnerable groups, is now aligned fully to the We Finance Code. Additionally, we will be looking at data and measurement and also have a comprehensive framework for data mapping for women MSMEs. We'll also be able to look at governance and advocacy so that we have a multi-layered governance structure with the CBK as the national champion and as the national coordinator. And on communication and engagement, we're going to have a strategic communication framework with key messages, stakeholder engagement plans, and preliminary outreach strategies. While finally on product development and capacity building, we're going to identify demand-side barriers to product uptake and a roadmap for inclusive product design and capacity building initiatives. And for us to be able to, achieve all this, it will then be on how we work closely with all the players within the financial ecosystem, working also with the joint financial sector regulators, all KBA and all the banks, SACCOs, all of them, and the non-state actors, then we can be able to achieve this. This is the roadmap, and as I said, we started by signing the letter of intent in October, and today, of course, is a big day for us. That's why we are all here. And then continuously, there are things that we are going to do, like onboarding signatories. We'll continue to do that. We'll continue also to finalize on our work plan so that by January 2026, it is ready. And that we will then have our secretariat in place. We also need to make sure by then we have the work plan to be in place. And then on issues of fundraising and capacity building, these are continuous, and we have already identified the key players. We even had a meeting organized by FSD, and FAO were taking us through, and we know that there is a lot of goodwill in this space. Even the World Bank, they are represented here, and they also were present in our previous engagements. Finally, and which is very important, is for us to be able to make sure there is proper monitoring and evaluation, because that is where the rubber meets the road. We can be able to have really a good launch, but if we are not able to, and for this specific case, utilize the data properly that we're able to get, and now see what are the strategies and how do we move forward, and also pick on best practice from those who already signed the code ahead of us, then it will not be of use for all of us. But given the commitment that we have from the Central Bank of Kenya, through the governor having signed the intent, and the team that we have at the CBK and working closely with FSD Kenya, I'm confident that we are going to really make it better for the women MSMEs in our country. Thank you so much.
Thank you very much, our Deputy Governor, Dr. Susan Kwech. But in this case, as we said, we're introducing her wearing her other hat as a national champion of the We Finance Code. So we do hope, ladies and gentlemen, that you've been able to, at the very least, in a brief way, understand the context of the three documents, the three pieces of strategy that we're launching this morning, the MTP IV for the financial sector, the National Financial Inclusion Strategy, and finally the We Finance Code. These three are very closely related, as you've heard. They each sort of in each other's territory, and what we are hoping is that through this process that we're doing today, and as we then come to the implementation of it, and I think we have seen from all three the implementation strategy more or less that is expected. It will call on I think almost everyone in this room and the people who are watching and listening elsewhere to participate in it, because if we are successful, which we will be, it will mean a transformation from every single step of where we are as a country in this financial journey. One of the more exciting things for me, people like us who have young children, is getting them involved in the financial literacy journey. I think that is something that is becoming much more useful in terms of where we are taking the next generation of Kenyans. And so that what you've heard about the We Finance Code, what's going on with the medium-term plan, and all that. I don't want to belabor these points, but I am particularly, at a personal level, very excited as to what we are doing here. So those were the presentations that were going into a lot of the detail of what is happening this morning and why we are here. But from this point forward, I would like to invite a number of people to address us. These are, and I'll call them and you'll know who they are as they come up to speak, have been partners, but they're also the people who are driving this process forward. So I want to begin with a representative of the Financial Inclusion Advisory Group. This is Isfandia Zaman Khan, who's a lead financial sector specialist from the World Bank, which has been a crucial partner. I think we've heard them mention, the World Bank, that is mentioned in all three presentations, and you'll hear them being mentioned as we go on. Very, very crucial partner for this process. So Mr. Khan, if you're able to make your way up to stage, and we'll hear from other people. A round of applause as he comes up to stage to address us. Karibu sana.
First of all, thank you very much, and all protocols observed. We will be very short on behalf of the bank. It is definitely a great honor on behalf of the World Bank and all development partners at the launch of not only the financial inclusion strategy, but the MTP and obviously the We Code. On behalf of the bank and the Financial Inclusion Advisory Group, we really do, with our full heart, commend the government of Kenya, the central bank, we see the CMA here also, and the SASTRA and all the regulators on really the vision and the leadership. This really collaborative approach that brings together all the players is really a testament for very, very inclusive policy making. We've heard a lot, but I think just to look back a little bit, and we have to really commend ourselves and yourselves that Kenya's journey in financial inclusion is really nothing short of remarkable. 2011, not that long ago, only 40% of Kenya's population had access to formal financial services. Today, that number is at 84%, and the aim is universal, which I'm very sure we will reach. Yes, this transformation has been empowered by innovation. We have agency banking, obviously M-Pesa and digital credit, but in a way, more importantly, it has been enabled by a very forward-leaning and tailored regulation by the CBK. Money providers are not new any longer, but some regulators have been a bit slow to adapt and have forward-leaning regulation. And I think in the CBK, we have a regulator that's always looking to innovate, and that is really critical. Our account ownership in Kenya exceeds global averages by 11%. And money mobile penetration is obviously one of the highest in the world, and a very, very minor gender gap itself. But I guess I am here on behalf of the World Bank, so I would have to mention the challenges that do remain. Financial diversification is limited. Only half of adults use more than one formal financial product. Regular savings are low, and insurance coverage is less than 3%. Most strikingly, only 18% of adults are considered financially healthy. 32% of Kenyans worry, their number one worry is school fees when it comes to money access. 30% say monthly running expenditure is their number one financial worry itself. Only 50% can come up with emergency money when needed. This is sadly a number lower than West Africa. I'm sure with these three launches that we are doing right now, these challenges in the next few years will definitely come down. The World Bank did a recently economic update, which gives us a very strong room for optimism. Private sector is actually recovered and growing, which has been helped by a more accommodative monetary policy. Lending rates have been declining. Loans have been becoming a little bit more affordable, and there is growth we see in the construction sector, in trade, in consumer durables, and agriculture sector. The World Bank and other partners have been mentioned. We have a number of projects with a number of people in this room, from the SAFER project that's supporting access to finance on enterprises, from KJET with the MSME department and ministry itself, from working on pastoral risk mitigation itself, and also on innovation and entrepreneurship. Looking ahead and just ending with that, we do refine the World Bank's and development partners' commitment to supporting this code in any way, shape, or form. From our side, when we had first heard that Kenya was interested in WeCode, we had asked the WeCode Secretariat, what does it actually mean in terms of financing support? So I'm glad to see the slide that DG Susan did on capacity enhancement and Secretariat financing. And I think you can count on the World Bank to be your ally to get the financing needed, because that was the first question we asked. All right, thank you. We do have the aim really is Kenya has an opportunity to harness our collective expertise of everybody in the room and the partners. And really from the World Bank side, we would really want Kenya to be the best in class in a number of things. And Kenya is already best in class in a number of more, but we really feel it can be really the star power across the things that you can mention itself. Kenya has the opportunity to make financial inclusion a reality for everyone, Jiku, regardless of age, regardless of gender, regardless of location. And we look forward to maybe coming back in a few years and having these numbers exceeded all expectations. So from the behalf of the World Bank and development partners, thank you a lot. Thank you.
Thank you, Mr. Khan. I noticed lots of applause when I heard the section that you got about your very kind offer. So I think it's worth it to applaud not just that, but him again. So please, a round of applause for Mr. Khan. And as he says, and as we introduced him, he's not just here in his capacity as a World Bank, but he's speaking on behalf of the Financial Inclusion Advisory Group, which I think Dr. Isaac Mwangi put into context where it fits into all this. The next person I'm going to call up is also speaking on behalf of a number of institutions, and he's a gentleman who's familiar to all of us, Mr. Godfrey Kiptum, who's a Commissioner of Insurance. But it's not just in that capacity, it's in his capacity as one of the leaders of the Joint Financial Sector Regulators Forum, which I believe he will tell us much more about, but it's a group that is well represented here that is looking at financial sector regulation. Karibu sana, Bwana Kiptum.
Thank you. Honorable John Mbadi, Cabinet Secretary for the National Treasury, Dr. Chris Kipto, PS National Treasury, Dr. Kamau Thuge, Governor Central Bank, Dr. Susan Koech, Gerald Nyaoma, Deputy Governors of the Central Bank. Good morning, ladies and gentlemen. I think this morning my duty is to say who JFSR is, and JFSR is composed of the domestic sector regulators. We have 5 of us, including the governor, and we have also affiliates from KDIC and PCF, who are very important players in the financial sector. And I think they are all here today. And with your permission, CS, let me ask the chairman and directors of these institutions to stand, and we can begin from Capital Markets Authority. So, Honorable Lugas and your colleagues in the board. Thank you very much, team from CMA. We can have the team from RBA, the board. Okay, so I would stand alone. So we can have the team from IRA. The directors, yes, they are behind. Thank you very much. The board of SASRA. Thank you very much, Sandaji, CEO. KDIC. Thank you very much, CEO. PCF, if they are represented. Okay, thank you very much. I can see you at the back. Thank you very much. CS, that is the team that makes up the domestic financial regulators, of course, including the central bank. And I'm sure the governor and his team will introduce themselves at the right time. I also want to just make a few remarks, CS, in terms of financial inclusion. I think this is a journey that the domestic regulators have been involved in for many years. we have worked together with KICD to make sure that we have a curriculum that supports education in the financial services in this country. And that program was launched a while back, and it is running in our schools as part of the curriculum. But the financial inclusion strategy that is being launched today, CS, is something that these regulators have worked on for a while, and the key goal is to get everybody involved and to include every member of society in this financial sector so that we can grow together as a country. And I also want to applaud the launch of the We Code today that will also promote the other part of us so that we together as a country can build our economy together. And the objective, CS, of this inclusion is, of course, to get affordable services in the financial sector, make sure that there is access, and also get quality and services that we desire and that will serve us so that we do not have things that we do not need. And finally, of course, as we were taken through by the presenter from Central Bank, is to promote consumer protection. And you know, this consumer protection is a problem, especially where people lack knowledge. And the Bible says our people lack for perish of knowledge. So we want to make sure that everybody is knowledgeable and they can be able to use those financial services as is required. And finally, let me thank the partners who have worked with us in this journey. And I think FSD has been very critical. Tamara Cook and your team, thank you very much. And the rest of FSD Africa and everybody else. So with those few remarks, let me take this opportunity to thank CS and the rest of the team who have worked successfully so that we are here today. Thank you and have a good day.
Thank you very much, Bona Kiptum. Another round of applause, if you do not mind. And he's sort of done half my job for me, because the person I'm introducing next is the person he last mentioned, which is the CEO of FSD Kenya, Tamara Cook. Please, karibu.
Allow me to stand on the shoulders of those who've spoken before me, all protocols observed. As I look out on the crowd, it is inspiring to see leaders from every corner of the private sector, of the financial sector, and of government, and of the development partners. It's not a surprise to see the financial sector regulators, as we've just heard about, but we also have the State Department of Gender, and of the State Department of MSMEs, and all other related parts of government that know that financial inclusion can enable the development priorities of Kenya. The mosaic of participation here is a reflection of the process that brought us to where we are today in launching these three initiatives. FSD Kenya has had the privilege to participate in these stakeholder discussions, which have spanned years. Director has already mentioned that we were together in 2022 as we were thinking about what were the needs for the financial services sector in the next medium-term plan. He asked us, what is the transformational agenda that we are going to develop as financial services sector players? And how will those help us achieve Kenya's development goals? I remember a similar gathering right here at this facility, over by the pool, where the Deputy Governor launched the formal process of developing the National Financial Inclusion Strategy. At that event, we also heard from the joint financial sector regulators. This is not a CBK initiative. This is across the entire financial services sector. And I think that the recent launch of the FinAccess reports of each of the financial services regulators is a great testament to the value and importance of demand-side data in shaping policies such as the ones we're launching today. Another example of this is that the work that's been done on the county level financial literacy trainings. And I was pleased to be able to join one of those trainings in Nyeri recently, where we're training trainers to go out and train to help people better understand what their options are in terms of financial literacy. The Women Entrepreneurs Finance Code is a global initiative, but it is connected with the passion that already existed in Kenya. Because I'm standing here, I would like to direct your attention to this woman here. Her name is Rehema. I met her in Vanga. She was part of a research project that we were doing on small firms. She is one of the savviest businesswomen I've ever met. She lacked access to finance, even though she had a thriving business. She was even a financial services provider. She provided credit to those who were buying fish from her. She was a sardine processor. And she also provided credit to the fishers who she was buying fish from when they were a bit short and she had some money and she could buy in advance. Very savvy. There's no bank branch in Vanga. There's only one bank agent in Vanga, and it's only open during school fees times. She is an example of how we can unlock more jobs and economic opportunity for women entrepreneurs through the initiatives that we're talking about today. She's not just a beautiful smiling face. She is a picture of what we are all hoping for the future. So the champion did an excellent job of promoting the Women Entrepreneurs Finance Code, and I would like to personally invite more of you to join in the signing of this initiative, because it is important that collective action is going to be the key to our success in this. In many countries, NFIS, the National Financial Inclusion Strategies they launch, or maybe even the Women Entrepreneurs Finance Code, are niche. They're maybe something that is more for the social sector. But in Kenya, I would like to applaud the leadership at the highest levels of the Kenyan government to bring these three initiatives together. They are mutually reinforcing. They mention each other. And it's showing us that financial inclusion is a core priority of the government of Kenya, that women are a core priority of the government of Kenya. But this may be our first national financial inclusion strategy in Kenya, but the reality is that since Vision 2030 was launched, every single medium-term plan included access to finance and the impact of that finance for enabling and unlocking economic development in Kenya. So we've had an NFIS. It was just embedded within these medium-term plans. Today is an effort to blow out and expand and enhance that commitment to financial inclusion. Lost my place. Kenya is not only recognized as a leader globally in financial inclusion, but it was also one of the first countries to start measuring financial health. Several speakers have already mentioned that significant gap between high financial inclusion in Kenya and low financial health. The tagline of the NFIS perhaps captures so much of our hopes for Kenya and what all of these three initiatives are hoping to build on the progress that's already been made. You've seen that tagline, but allow me to spell it out a little bit more. So it starts with leveraging digital transformation. For those of you who know me, you know I like to use numbers in everything I talk about. And so I'm going to tell you how many times the word digital was mentioned in the NFIS. It was 162 times. Digital is the building block that we have in Kenya that has enabled access to finance and innovation on that access to more financial solutions for more people. When we read the next line, it's so leveraging financial literacy. That appears 89 times in the National Financial Inclusion Strategy. But it's not just about informing people about finance. It's also giving them the tools to make good decisions about whether what the solution that's in front of them is affordable. It helps them understand, which is mentioned 48 times, by the way, and whether or not they are being protected, whether that product is disclosing and transparent. Consumer protection shows up 55 times in the National Financial Inclusion Strategy. And finally, the tagline ends with the idea of enhancing, to enhance financial inclusion. There are some people who would say, Kenya's already financially included. Why are you launching a financial inclusion strategy? Yes, there's 10% who are still excluded, and they are very important. In fact, if we look at the youth who are mentioned 61 times, women and gender 112 times, these are some of the pockets of exclusion that still exist when we think about financial inclusion in Kenya. But we also need to think about the people with disabilities, the refugees. And so with people with disabilities, it shows up almost 50 times. And I would like to thank the Central Bank of Kenya for having sign language interpretation at this event, so that those of you who can hear what I'm saying, but we can all understand what we're trying to launch here today. And being intentional about that is really important. The Kenya Bankers Association showed incredible leadership in helping provide tools for bankers to be able to reach hearing impaired staff through the Deaf Elimu project, for example, and I hope to see many more initiatives like that. I'm also thinking of Safaricom's Braille Watch. A friend of mine uses that, and it provides such privacy when she receives an M-Pesa transaction, because she doesn't have to hear it, and everybody around her doesn't have to hear it. She can receive it that way. And finally, I'd like to go with the very last line of the tagline, which is to enhance financial health. Financial health is three things: managing day-to-day, dealing with risk, and investing in the future. In Kenya, according to FinAccess, 39% of people said that they had slept hungry in the last month. That is not acceptable. That is not being able to deal day to day. And so what are the financial tools that we can provide with people so that they and their children are not sleeping hungry? When we think about dealing with shocks or dealing with risks, we think of the farmers who are dealing with a drought or a flood that is impacting their ability to earn money for their family and feed their families. And it's great to see the references to climate and environment, which are reality on the ground, for not only for farmers, but for so many entrepreneurs and so many families across Kenya. And we need to be more resilient. It's great to see the NFIS and MTP emphasizing green finance. And finally, how do we invest in the future? You know, some of you may know that I was first a loan officer here in Kenya, and the very first loan that I recommended to the credit committee was of a woman on River Road who was selling some dresses, and she wanted to grow her business, but nobody would lend her money because she didn't have collateral. And so how do we provide tools that look at alternative sources of collateral, other ways of enabling women like her to be able to invest in their futures, not just for themselves, but for their families and for their communities? As we think about the tagline of the medium-term plan, it looks at trying to understand a vibrant financial sector that will enhance savings, that will enable Kenya to invest in what Kenya needs. Financial health is a way that everyone can have an increase in savings so that they can deal with these risks, and that will help us achieve that top-line agenda for the medium-term plan. So as I close, I will speak in the context of my next role, and I hope many of you will be able to meet Rashmi, who's our incoming CEO. Her Majesty Queen Maxima of the Netherlands, in her role as the United Nations Secretary General Special Advocate, has been deeply engaged in the Kenyan financial sector and the evolution across the public and the private sector for many years. Her impactful visit here in 2023 and her global leadership in promoting financial health drew me to my next role as her incoming director of her office at the UN next month. This will be an opportunity, thank you. This will be an opportunity to help bring what we are learning here in Kenya, what we've heard about all morning, to a global platform. I'm deeply, deeply sad to leave Kenya, but I guarantee that Kenya will not leave my heart. So now, it is my honor to read an official quote from Her Majesty that you can also find on page 16 of the National Financial Inclusion Strategy when you get your copy. Kenya's new financial inclusion strategy marks a major milestone, not only in expanding access, but ensuring that financial services truly improve people's lives. By placing financial health at its core, the strategy recognizes that inclusion is not just about having an account, but about resilience, opportunity, and confidence for every Kenyan. I commend the Central Bank, the National Treasury, and all partners for this leadership, which will serve as an inspiration for countries across the region and beyond. This is from Her Majesty Queen Maxima of the Netherlands, the United Nations Secretary General's Special Advocate for Financial Health. Asanteni sana.
This is not part of the program, and I hope I have your permission, Bonasias and everyone else. I don't know whether we can get on our feet and just applaud Tamara Cook for all the work that she's done over the years that she has been. Thank you. You may take your seats. I'm not sure there's a single institution represented here that has not interacted, engaged with, been a part of FSD Kenya, and particularly Tamara. And I remember when we were doing the FinAccess survey launch, and I think most of us tend to get involved in that. One of our presentations, and I think it's one of your favorite ones, the ones you display pictures from Taita. Is it Taita? Well, Taita Taveta. And what's going on there, what's happening with the entrepreneurs on the ground, especially women entrepreneurs. And so the issue of financial inclusion is not just theory, it's actually what is happening, as we say in Kenya, qua ground. The one thing I know for a fact is that everyone who leaves Kenya and is sad about it, and we did see your emotion, is always back. And so we know we're letting you go kwa muda mfupi. You shall be back very, very soon, and we shall welcome you when you come back. But for now, thank you so very much. And also for the message from Her Majesty the Queen received. And I think you can send word back that it is very well received and very well appreciated. Next, a lot of people here are wearing multiple hats, as is the next honorable speaker. So we know him in his other capacity, and we've recognized him as such. But I want to introduce Dr. Chris Kiptoo in his capacity as a chairman of the National Financial Inclusion Council, but we also know him as our principal secretary in the National Treasury. Karibu sana, Dr. Kiptoo.
Thank you very much, Wallace. The CS, National Treasury, Honorable John Badi, Governor Central Bank, Dr. Thuge, and the Deputy Governors, Gerald Nyaoma and Susan Koech, my colleague PS, Susan Mangeni, and may I ride on the rest of the protocol as already established. Good morning. Hamjambo. Assalamu alaikum. CS, I have two declarations to make before I read my speech. First, to indicate that I am a central banker. And I had a stint of 16 years working at the Central Bank of Kenya. So what was Central Bank? Banki Kuu ya Kenya. Hamjambo. Banki Kuu hoye. And CS, of those 16 years, I spent 7 years on secondment. The Central Bank decided to second me to International Monetary Fund for 2 years. Then I was seconded for 1 year to Capital Markets Authority, and another 4 years at the Office of the Prime Minister. Then 2012, I found a job at the Trademark East African. I said Central Bank bye-bye. But I have also another declaration to make, that of those 16 years, I spent 10 years in this compound called Kenya School of Monetary Studies. So I'm happy to come home. We used to stay here, and all my children were brought up here. I just came back this morning to find that it is a different institution, new buildings, very modern. At that time, we didn't have a superhighway. So today we came with my driver and missed the turning point. We went all the way to Kasarani, then came back. We thought we were coming in here. We had to also go. So that is progress. Can we appreciate the great progress that? Yeah. So, CS, I am speaking in my capacity as the chairman of the council, and so I have a few remarks to make. First is to appreciate you for joining us, and everybody else, because you have taken time to come here today. And actually, I thought I should also take this chance to apologize to all of you who came in from as early 8 a.m. because CS and I delayed you, including and we are responsible for the delay of the governor in coming here. This is because I'm the one who sent out invitations and I indicated the time to be here. But some new development came up. We had a major event with our Safaricom and CS was leading us. I think he will tell you what it is that we were doing. I leave it to him. So we have these 3 complementary documents that we are seeking to launch today, and they have been presented here. The FSS plan, that is the Financial Services Sector Plan under MTP IV, the National Financial Inclusion Strategy for 2025-2028, and what DG Susan presented as We Finance Code. These documents are under our better bottom-up economic transformation, and they are part of our Vision 2030. The MTP IV was launched in 2024. Sorry, MTP IV was launched in March 2024. And for those of you who can remember, we have had a lot of transformation. And cognizant of the unique role of the financial services in the economy, the National Treasury has developed MTP IV Financial Services Plan so that we provide detailed sector policies, programs, and projects for the implementation. And Inyangala presented. I'm not sure even whether I should repeat, but maybe just for it to sink more, I will repeat where necessary. And for the medium-term plan, the third one, MTP III, I would like to say we witnessed as a country remarkable progress, which has reshaped the landscape of our financial sector. But despite those achievements, there are challenges which were highlighted in the presentation by Inyangala. First is the emergence of technologies like virtual assets, even AI, and digital platforms. They create opportunities, yes, but they also bring in challenges, new risks, including cybersecurity and data privacy. The other challenge is the need to integrate environmental, social, governance principles and financial operations to address climate risks and support sustainable development. Some of you may be familiar, and I used to be in PS Environment, and we submitted to UNFCCC our updated nationally determined contribution that requires, for a period of 10 years, $62 billion for mitigation and adaptation. For adaptation alone, we require $44 billion, and for mitigation, $18 billion. 13% of that is supposed to come from national government, our own budget. The balance is supposed to be from the biggest emitters. And most of you know that we have a gap in that area. So in the area of financial sector, this is an important area to address. Then we have the issue of financial access disparities that persist, especially among the marginalized, the women, the youth, and PWDs, and rural communities. There is the issue of literacy, which was indicated earlier, that continues to restrict uptake of the financial products and services. And then there is the issue of informality, and I was hoping I'll get some time to give to PS MSMEs, but I'm not sure whether the time will allow. I will see how we progress with the time. So these challenges and emerging issues underscore the need for a robust, forward-looking sector plan that balances innovation with stability and inclusivity. So the plan, therefore, which I think has been presented, seeks to enhance 3 pillars of the financial services. And these pillars have been mentioned. Tamara even put it very well: access, efficiency, and stability. These 3 pillars are mutually reinforcing and will be addressed to ensure a vibrant financial services sector that effectively finances the country's investments needs for sustainable development. So let me just mention a few statistics that are here. The financial services sector policies, programs, and projects which are underpinned by ambitious targets that include: one is increasing the financial sector's contribution to GDP from 7.8% to 10%. And this is by 2027. We are also hoping to boost gross national savings from 13.1% to 20.8% of GDP, and improving Kenya's global financial system ranking from 78 in 2019 to among top 20 by 2027. And the Central Bank of Kenya, working with the National Treasury, developed the strategy, which is the National Financial Inclusion Strategy for 2025-2028. And we have been told it's aligned both to the Vision 2030 and to the bottom-up economic transformation. And the presentation that Nyangala made actually informed that there are about 5 issues that he mentioned, but I think I'll just mention 3. That we seek to deepen financial inclusion through close collaboration, coordination, and cooperation among stakeholders. We need to drive innovations and develop supportive policies in undertaking financial inclusion initiatives, and design a roadmap for expanding equitable access to and usage of quality financial products and services delivered in a sustainable way to match consumer needs. So, ladies and gentlemen, we have an institutional mechanism that was presented to you. And I think at this point, I would like to mention those who sit with me in the council. And when I mention your name, you please stand. The first is the PS for Internal Security and National Administration, Dr. Raymond Omolo. I don't know if he's here or is represented. Let's appreciate him in absentia. Dr. Engineer John Tanui, the PS for ICT. Is he here? Honorable Patrick Kilemi, the PS for Cooperatives. Is he here? Please appreciate them even if they are not here. Susan Auma Mangeni, the PS for State Department for SMEs. Pigia makofi, hiyo haitoshi. Ni PS wa Mahasla. Professor Julius Bitok, the PS for Education. I don't know if he's here. Ismail Made, the PS for... No, this is not the PS for Youth. Somebody made a mistake. It is Fikirini Jacobs, who is the PS for Youth Affairs and Creative Economy. Then we have Anne Wangombe of Gender, State Department. Is she here? Then we have Kamau Thuge, the Governor of Central Bank, together with Susan Koech, the DG. Then Wycliffe Shamya, Helen Chepchumba Chepkwony, she's there. CEO for Kenya Deposit Insurance Corporation. David Sandagi, this is for Sasra, acting CEO for Sasra. Then Charles Mashira of RBA. Then Mohammed Sahal of PCF. Raymond Molenje, that is the Kenya Bankers Association. Are they here? Okay, yes, please appreciate it. And finally, Dr. McDonald George Odundo, who is the DG for Kenya National Bureau of Statistics. Let's appreciate all of them together. The chairman of that council is yours truly, Chris Kipto. And the chair of the technical coordinating committee is Susan, DG Central Bank. Then we have thematic working groups who will handle a number of issues. When we met in our first meeting, we agreed we'll meet twice in a year. And we tasked our technical teams to develop the roadmap. So we'll be meeting early January for our first meeting, then meet in June for second meeting, and then in December for the last meeting. So I want you to appreciate the work that my team have done in developing the rest of my speech. Appreciate them. And I think it would be unfair if I left the stage without appreciating the work the Central Bank of Kenya has done in support of the work of National Treasury to achieve macroeconomic stability in our country. 3 years ago, when we came in, some of us, we know inflation was almost double digit, 9.6. Today inflation is at 4.6, and it had come down to 2.7. So inflation is low and stable, and that is the key mandate of Central Bank. Can we appreciate Central Bank? Our shilling had weakened. The shilling is now stable. Can we appreciate Central Bank? Our reserves were around less than $6 billion. Today, if I'm not wrong, it's $12.6 billion. Can we appreciate Central Bank? We know we have contributed a little through the actions we have taken at Treasury, especially buyback of the Eurobond, which helped to de-risk. But CS, we have a role, as I was talking to my PSS yesterday, we have a role to make sure that our fiscal consolidation plan remains credible, to ensure that the gains that we have achieved in the macro environment are achieved. So I now take this opportunity to welcome the Cabinet Secretary, or is there another, because according to the speech I'm supposed to welcome the CS. Okay, thank you very much.
Thank you very much, the chairman of the National Financial Inclusion Council, which was a hat that Dr. Chris Kiptoo was wearing here. And I know it's an automatic thing to welcome the Cabinet Secretary, but I'll ask that we hold off on that for just a second, because our next speaker is the one who will have that privilege, because I will invite him in his capacity as a governor of the Central Bank of Kenya, well known to us, and I'd like to welcome him on stage, Dr. Kamau Thuge, our governor of the Central Bank of Kenya.
The Cabinet Secretary, the National Treasury and Economic Planning, Honorable John Mbadi, the PS Treasury, Chris Kiptoo, that always steals the thunder from on what we have achieved in terms of macroeconomic stability, if we have. The Deputy Governors, Gerald Nyaoma and Susan, your presentation on the We Finance Code was excellent. I think with your leadership, we'll accomplish a whole lot. Tamara Cook, congratulations on your new appointment. I know we have worked quite a number of years with you. You've done we appreciate the work that you've done, commendable work, and we do wish you the best in your new assignment. I have members of the CBK board. I won't introduce them individually, but perhaps if they could just stand, the ones that are here. I know the chairman is abroad, but they are the board members, CBK board members. Yes. So all of them are here. We also have the Monetary Policy Committee members. These are the guys who set interest rates, and I'm sure they'll do something next week. Where are the MPC members? Yeah, those are the MPC members. The heads of institutions and CEOs of other financial sector regulators, the development partners, government agencies and other institutions, and of course staff of the Central Bank of Kenya, the National Treasury, and also FSD Kenya. I wish to begin by expressing my sincere gratitude to the Cabinet Secretary, the National Treasury and Economic Planning, Honorable John Bandi, for honoring our invitation as a chief guest at the launch of 3 key policy frameworks for our financial sector. Your presence this morning is a strong endorsement of the government's support to developing a competitive, stable, and resilient financial sector responsive to the needs of all Kenyans. Honorable CS, allow me to once again just acknowledge the Principal Secretaries, heads of government agencies and departments, CEOs, and all guests present for joining us this morning. And your presence truly reflects strong partnership and a gesture of goodwill which is needed for implementation of this strategy. The journey towards today's launch is as a result of strong collaboration and cooperation among the CBK, the National Treasury, FSD Kenya, and many other stakeholders, most of them present today. They devoted their time, expertise, knowledge, and experience in developing this transformative strategy for our financial sector, and we truly appreciate your support and look forward to stronger partnerships during the implementation stage. Exactly 1 year ago, CS, you presided over the launch of the 2024 FinAccess Households Survey Report. The report, again a collaboration between CBK, KNBS, and FSD Kenya, provided crucial insights in Kenya's financial inclusion space. While it highlighted positive developments such as the remarkable rise in access to formal financial services between 2006 and 2024, it also identified gaps that drew our attention. For instance, the expanded access to financial services from 27% in 2006 to 85% in 2024 was not in tandem with the level of financial health, which only stood at 18.3% in 2024. Additionally, Kenyans who rely on informal financial services remained high at 5.2%, while those excluded from any form of financial services was disproportionately high at 9.9%. The report further identified several factors behind these statistics. For instance, mobile money adoption was a key driver of expanded financial inclusion, but is plateauing out. There are also gaps in terms of lack of identity cards, which has been mentioned before, low financial literacy, lack of income, and socio-cultural issues that impacted financial inclusion. This NFIS has outlined very clear initiatives under a robust monitoring and evaluation framework to address these gaps and achieve our set targets for inclusive financial sector. The CBK recognizes that deepening financial inclusion requires macroeconomic stability, and this enables lenders to perform their credit intermediation role effectively, insurance companies to achieve their risk intermediation goals, and financial markets infrastructure to settle transactions efficiently and safe custodial services, and finally for financial markets to provide suitable investment opportunities. Ultimately, a stable macroeconomic environment enables households and firms to make the right decisions about earnings, spending, budgeting, savings, and investments. Our commitment to macroeconomic stability has been well demonstrated in our achievement and maintenance of low inflation and a stable exchange rate amidst a hostile and challenging global environment arising from policy uncertainties as well as geopolitical tensions. For example, the CPK recently adopted the inflation targeting monetary policy framework to strengthen the effectiveness of monetary policy transmission. We have also introduced several reforms in the foreign exchange market to make it more transparent, effective, and this has resulted in a more effective process of price discovery. These reforms, together with a proactive monetary policy stance, have anchored price and exchange rate stability, thus lowering overall inflation from the 9.6% it reached in October of 2022 to the current level of 4.5% in November of 2025. Additionally, the Kenyan shilling, as the PS indicated, appreciated by 17% against the US dollar in 2024 and has remained stable in 2025, supported by increased foreign exchange inflows, confidence in the economy, and the strong buildup of international reserves, which the PS referred to. We have reached US dollars about $12 billion, which is the equivalent of about 5.2 months of import cover, and surpasses statutory requirements as well as regional convergence targets. The financial sector has also recorded wide-ranging reforms that have contributed to the transformation in the financial inclusion landscape for over the years. The most recent includes the increase in banks' core capital from 1 billion shillings to 10 billion shillings by 2029, and the new risk-based credit pricing model, which is anchored on the Kenya shilling overnight interbank average, otherwise known as Kesonia, and seeks to ensure the banks respond to monetary policy decisions for enhanced transparency in credit pricing. We continue to see the weighted average lending rates by commercial banks declining from 17.2 in November of 2024 to below 15% in October 2025, reflecting the monetary policy decisions. CS, what part of the reason why we introduced this Kesonia, this new risk-based credit pricing model, was when we noticed that when we had a high inflation and we needed to raise interest rates, we were able to raise the policy rate, and the banks were very quick to also raise their lending rates, which is appropriate because at the end of the day, when you're tightening monetary policy, you want lending rates to increase as quickly as possible to affect, in a sense, aggregate demand and to reduce aggregate demand. So that's okay. However, when we started the easing cycle, we noticed some reluctance on the part of the banks to lower their lending rates. To give you an example, so far we have lowered the policy rate by about 375 basis points, 3.7 percentage points, but the lending rates have only declined by only about 220 basis points. So there's a lag. And this new framework, we think that it will address that lag by the fact that now all variable rate loans will have exactly the same reference rate for all banks. And this new monetary policy implementation framework that we now have, we now make sure that the interbank rate, which is also Kesonia, we make sure that we intervene in the market to ensure that it is as close as possible to the policy rate. So if you go to the market now and to see where Kesonia is, I can tell you where Kesonia is. It's a market-determined rate, but I can tell you it is going to be around 9.25. Yeah, because that's where the policy rate and we intervene to ensure that that interbank rate is very close to the policy rate. What does that mean? That means that when the Monetary Policy Committee meets and decides to lower the CBR, the policy rate, let's say we decide to lower the policy rate by 100 basis points, yeah? Then we go into the market, make sure that Kesonia has gone down by 100 basis points, and because all variable rate loans, the base, the reference rate is Kesonia, they will immediately be reduced. And I think this way we have resolved that asymmetry. When we raise rates, banks raise them, but when we lower the rates, there tends to be a lag in the reduction of those rates. So the rollout of the DAO CSD in 2023 remains a key innovation, enabling many Kenyans and the world to invest in government securities with ease, thus deepening financial inclusion. We plan to introduce a retail bond, the Emakiba, soon to cater for the less well-off, which will further deepen financial inclusion. Finally, working closely with EIB, we have begun to further strengthen the process of greening the financial sector by issuing to the banks the Green Finance Taxonomy as well as the disclosure framework. For the time being, it's not a mandatory requirement for the banks to report to us, but beginning of 2027, it will be mandatory. So these are among the many reforms being undertaken by the central bank to transform the financial sector. The launch of this NFIS alongside the MTP IV and the WE Finance Code is expected to consolidate the gains made in financial inclusion and leverage technology, data, and synergy among stakeholders to harness emerging opportunities for a more inclusive, stable, and sustainable financial sector to serve generations to come. The CBK will work closely with all stakeholders to ensure successful implementation of these transformative frameworks for our financial sector. Once again, Honorable CS, we thank you for accepting to join us today for this important event. And it is now my honor to welcome the CS, the National Treasury, to deliver his speech. Thank you very, very much.
Thank you, Governor. Allow me also to mention that and register our apologies for keeping you waiting. We, as PS said, had another engagement in the morning announcing the divestment in Safaricom PLC. And more details, I'm sure, will come through when you get to engage with this morning's announcement to the same. So the process has just begun. You know, I was, when PS mentioned that it was with CBK for 16 years doing technical stuff, I started thinking of what I was doing. And I realized that I almost spent the same number of years, if not one more year, largely in politics. So as my PS, what a contrast, as my PS was doing a lot of technical stuff, understanding how our economy is run, I was very busy, if you like, saying, making noise outside there. But probably I believe that blend is what is probably needed, where you have technical people informing policy decisions, and we are also here in this space with the political background, communicating, talking, and coming up with policies. And so, but now I'm a technical person. In fact, when they call people at the Treasury Mandarins, and by the way, do you have Mandarins here? People from Treasury, those of us from Treasury, could you stand up? Yes, we have a few Mandarins here, and I'm the headmaster of the Mandarins now. Thank you very much. So, Governor, Central Bank of Kenya, who is actually our host today in this event. My principal secretaries, we have here Dr. Chris Kipto, and of course, Susan Mangeni, who is in charge of MSMEs. Deputy Governors, Susan Koech and Gerald Nyauma. Representatives from development partners and private sector institutions present. Representatives from ministries, departments, and agencies. Of course, ladies and gentlemen, good afternoon. It is my pleasure to join you in this important meeting when we officially launch 3 critical documents in the financial services sector, namely MTP IV Financial Services Sector Plan for 2023-2027, National Financial Inclusion Strategy NFIS 2025-28, and the WE Finance Code, or if you like, Women Entrepreneurs Finance Code. So on the onset, I thank His Excellency the President for being a champion of this process, as this demonstrates the government's commitment to fostering a vibrant financial services sector, critical for enabling implementation of the bottom-up economic transformation agenda. My pleasure at being here finds space in the fact that the National Treasury is spearheading implementation of financial services sector policies, programs, and projects with all sector stakeholders. So in line with the MTP4, we have gone further to develop MTP4 Financial Services Sector Plan, which we are launching today. The vision of the plan is to create a vibrant and globally competitive financial sector that will promote high level of savings to finance Kenya's investment needs. Ladies and gentlemen, the implementation of this MTP4 began in July 2023. I am glad to report that even though we are launching MTP4 FSS plan today, we have registered impressive achievements in the sector already. The systematic approach to realizing this feat represents, to mention but a few, as follows. 1 is the national policy on virtual assets and virtual asset service providers, which was approved by the Cabinet on 12th of March 2025, and I think Nyangala mentioned that. Further, Virtual Asset Service Providers Act of 2025 was enacted and assented to in October 2025 to provide legislative framework for regulating and supervising virtual asset service providers. Number 2, to promote credit guarantee in the country, particularly to MSMEs, some steps have already been taken, and these include A, credit guarantee policy and the establishment of the Kenya Credit Guarantee Company as a limited liability company, which was approved by the Cabinet in January this year. Number B is the Central Bank of Kenya Act, which was amended in December 2024 through the Business Laws Amendment Act to allow for licensing and regulation of credit guarantee business by the CBK. And C, establishment of Rural Credit Guarantee Scheme window to provide risk sharing mechanism to catalyze funding into the rural and agricultural sector. Number 3, enactment of key regulations to support the capital markets, insurance, and retirement benefit subsectors. Number 4, CBK has registered 126 digital credit providers as at June 2025. Number 7, the Dow Central Securities Depository was launched in September 2023 to deliver a simple, secure, and efficient process for investors to access government securities. Next is the National Retirement Benefits Policy was approved to provide a framework to guide the harmonization, coordination, good governance, and growth of the retirement benefits for all Kenyans. And finally, enhanced depositor protection through implementation of a risk profiling framework to proactively assess the risk exposure of individual banks and risk-based pricing contribution to the Deposit Insurance Fund. This progress is a commitment that what we are launching today is not just an ambitious plan, but also a realizable dream to transform the sector for greater economic impact. Ladies and gentlemen, we are also launching the first National Financial Inclusion Strategy 2025-2028. I am informed that this is a product of efforts by many stakeholders, both public and private sectors. To adhere to the tenets of the Constitution of Kenya, the strategy actually underwent public participation, receiving substantial comments from all over the country, making it a truly national strategy. I therefore commend the Governor of the Central Bank and his team for this transformative strategic framework to guide the developments, policies, initiatives, innovations, and projects in the financial sector in a coordinated manner. The strategy acknowledges the significant milestones in revolutionizing access to financial services and products by Kenya, largely thanks to the adoption of mobile money in 2007. As a result, adult population today access to formal financial services rose from 26.7% in 2006 to the present 84.8% across access in 2024. Gender gap in access to financial services narrowed to just 1.6% from 12.7% in 2006, and below, which is way below the global average of about 6%. It has also outlined narrowing of rural-urban divide in access to financial services thanks to digitalization. However, the strategy is not oblivious to the plight of the 10% or so of Kenyan adults completely excluded from any form of financial services by 2024. And I think the speakers who spoke ahead of me have already spoken to this. It also recognizes the need to bring the 5.2% of Kenyans who rely solely on informal financial services into the formal system to meet their personal and business needs. It identifies the 18.3% financial health score as key area of focus, and again, many of us have already spoken to that. Lastly, the strategy outlines the need for financial sector players to come up with specially designed services and products for disadvantaged groups, such as majority of women, especially in rural areas, youth, people with disabilities, refugees, victims of climate change shocks, and people living in extreme poverty. Most of these vulnerable groups fall prey to predatory lenders, thus compounding their already precarious situation. So, ladies and gentlemen, the final and equally groundbreaking initiative is the Kenya's signing of Women Entrepreneurs Finance Code, a global agenda towards empowering women through access to finance. I want to appreciate the leadership of the Central Bank of Kenya as the national champion of this initiative, with strong support from the State Department for Gender and Affirmative Action. And of course, now here I'm appreciating the Central Bank as an institution, but also appreciating Susan on her capacity as an individual in championing this. FSD Kenya, we appreciate you in this endeavor as well. And Kenya Bankers Association and stakeholders who have come on board. This noble idea provides a platform to which all women of this country are placed at the center of economic conversations, innovation, and decision making. And Susan, I agreed with your, not really your assessment, but report on the findings of the research. You know, when you started highlighting how those entities that are led by women outpacing those which are led by men in all aspects, including profitability, yeah, I agree with you entirely, because women are more careful in everything they do. Yeah, there is no lie in that findings. It is correct. And probably we need more women in that space and leadership. I am informed that by signing this code, Kenya now joins a global movement of more than 30 countries that seek to leverage national strategies and data to unlock finance for women-owned and women-led MSMEs. It is unacceptable that while women-led MSMEs contribute significantly to our economy and employ millions of people, only 27% of the women-owned businesses can easily access banking services, way below 45% of men-owned businesses. In fact, sometimes I ask myself why banks and financial institutions are doing that. Yet it is known that men are the most difficult in repaying. So I think we need to start thinking of how to include more of women-led enterprises. As a result, most women rely on informal sources and short-term digital credit, thus exposing them to many risks. I commend institutions signing the code as a commitment to addressing this gap and request more others to join this important initiative. The financial services sector stakeholders will continue to build emergencies to ensure that we fully implement initiatives in these 3 documents being launched today. The National Treasury and Central Bank of Kenya will spearhead coordination of implementation, monitoring and reporting to ensure that by the end of the plan period, we achieve our targeted outcomes. Allow me to thank all stakeholders that have joined us today, and I call upon them to commit to fully implement the initiatives within their institutional mandate. I am confident that together as one, we shall ultimately position Kenya as a global and regional financial hub and increase financial services sector contribution to our GDP. So before I conclude, it would be unfair for me to conclude my remarks without thanking the Central Bank for the strategic decisions that they have taken in helping us steady the ship and manage our economy and have stability in our economy. For those who are doubting that Kenya's economy is stabilizing, I will tell you, we have stabilized this economy. We have steadied it. What we now need to do is to stay on course and not to drop the ball. The central bank's efforts have helped in managing inflation. We now today have healthy reserves. The interest rates are coming down. The stability of the shilling cannot be overemphasized, and many others. But I must also say that this can only be achieved and realized if there is collaboration between the CBK and the National Treasury. National Treasury, we are still having challenges with revenue mobilization and fiscal consolidation. Expenditure pressures are still high. We are still underperforming in terms of revenue collection, and that is why we have shifted a lot of attention to Kenya Revenue Authority. We recently enhanced their budget by close to 20 billion shillings, just to give them the capacity and the tools that they need to eliminate and remove any excuse that would arise for failing to do what is right. But that does not mean that we are going to have a KRA which is going to harass the taxpayers. KRA must be responsive and know that the taxpayers is a cornerstone of our economy and must be handled with care as we enforce tax compliance. I also want to mention that through the efforts of the National Treasury working together with the CBK, and I would say helping the CBK, because the CBK cannot achieve inflation rate management, healthy reserves and interest rates if we don't also at the Treasury take certain decisions, one of which is to de-risk, especially where the loans are falling due for payments, like what we had last year when we were in February and Eurobond of $2 billion was coming up for payment in June, and there was no clear communication of the plan to do it. Actually, there was no plan. I think I don't want to blame the previous government, but just to say there was no plan. Fortunately, some action was taken in buyback that helped steady the ship. The shilling had lost ground to about 160 to the dollar. That is why National Treasury, and again here, working collectively with the central bank, we decided to de-risk further by buying back the 2027 Eurobond that would have fallen due in 2027 May. And we bought about 60% of it. Again, that was in February, March this year. Again, in September, we took a step further to also again buy back the 2028 maturing Eurobond to about 60%, basically de-risking our economy from possible shocks. We have also taken certain steps, including settling some of the pending bills, especially in the road sector, by coming up with other innovative ways of raising funds. And so today you can see a construction sector that had started shrinking now is growing at 5.9%. That is because of the intervention that the government took to deal with that problem. We will move a step further and see how we can deal with other pending bills which are causing ballooning of non-performing loans in our banks and distorting our financials and also affecting liquidity. And that is why many Kenyans say we don't feel money in our pocket and the rest. We have also supported certain sectors which were doing very badly, like the mining sector. We released about 2.6 billion to support that sector, and the results are out there. The mining sector, which had started shrinking early in the year, late last year, the first quarter of 2025, it grew by over 5%, and the second quarter, the growth in that sector was over 10%, 10.1%. Our interventions also in agriculture has also helped, especially in handling inflation and also the reserve, because we have been spending so much money in terms of forex reserves to import food into the country. If we reduce that, then obviously we are helping in the central bank in managing their reserve. And again, also the decision that the government took on importation of petroleum products through G2G. So we will, Governor, I know you have been frustrated with our fiscal consolidation path, but we will put more efforts in ensuring that we contain the fiscal consolidation, contain expenditure pressures. I want to end by pointing out that the governor mentioned that that the stability is as a result of foreign currency inflows, which is a fact, increase or improvement in our exports. You know, the tea sector is now performing better. The coffee sector is coming up. Even pyrethrum, which had long died, is coming up. We are seeing more tourism numbers. But also, we must point out that there is renewed confidence in our economy, as the CBK governor said. And that confidence cannot just come out of nothing, out of the blues. And recently, IMD rated Kenya as the best, I would call it best investment destination in Africa. That is not us assessing ourselves. That is someone assessing us and saying that in terms of economic performance, we are doing well. In terms of doing business or government efficiency, we are not badly off. And in terms of business efficiency, we are not badly off. And in terms of infrastructure. Therefore, we just need, first, as Kenyans, to have confidence in ourselves and in our economy. And two, think strategically on how we can maintain that momentum. And that momentum we cannot maintain by just sitting back and saying that now things are okay. We have recognized that we don't have enough fiscal space to do major investment or infrastructure projects. So we must think outside the box And that is why the government has put forward an initiative where we are going to privatize some of our SOEs and putting that money into a fund. We are not consuming the money. Whatever we are offloading is not for budgetary support, is not to fill our fiscal deficit. No. Action we are taking is to create National Infrastructure Fund, which we will now use to link the private sector and bridge the institutional investors with our public investment or infrastructure assets, converting one asset to the other. I will speak to that in another forum. Today, I wanted to stop there because we have also taken quite a bit of time. So it is now my pleasure to witness the signing of the Women Entrepreneurship Financing Code and to officially launch the MTP IV FSS plan and National Financial Inclusion Strategy. Thank you, and God bless you all.
Another round of applause for our CS as he takes his seat. Asante sana. We do know it's been a busy morning, and we thank you for joining us this morning. So ladies and gentlemen, with your permission, we'll just take a few seconds. We just want to slightly transform this area because, as the CS said, as he was winding up, he's here to witness the signing of the We Finance Code. So we'll have a bit of movement where the tables will come, and I'll ask my colleague Ada to take us through that process. So we'll just give the young men a few seconds to move that, and once that is done, we shall then go through the process of what the CS has outlined, the signatures, and then we shall do the rest of the things.
Ladies and gentlemen, we have reached a truly historic moment in Kenya's journey towards inclusive finance and economic empowerment. So the symbolic signing of this Women Entrepreneurs Finance Code, also referred to as the We Finance Code, is more than a document. It's actually a voluntary sector-wide commitment by our financial institutions to intentionally dismantle barriers, foster an enabling environment, and increase the flow of credit and tailored financial products to women-owned and women-led enterprises. It is a clear demonstration that the financial sector recognizes that empowering Kenyan women is not just a social imperative, but a fundamental driver of sustainable economic growth. So to symbolically cement this commitment on behalf of the entire financial ecosystem, we have invited leaders from key umbrella associations. So I would like to just invite to stage Kenya Bankers Association representative, the CFO, Mr. Kennedy Mutisia. A round of applause for him. Thank you very much. As he sits down, I would like to invite Mr. Jared Getenga, the CEO of the Credit Information Sharing Association of Kenya. I would also like to invite the CEO of SASRA, Mr. David Sandagi. Please come forward. I would like to invite the CEO of AMFI Kenya, Association of
microfinance institutions. Ms. Caroline Karanja, please come forward. Kindly take your seat, please. And then I would like to invite the CEO, the Insurance Regulatory Authority, Mr. Godfrey Kiptum. Please come forward. Thank you very much. I would also like to invite Ms. Lucy Kaaria, who will be showing you what you need to do. So before we commence the signing ceremony, I would also want to invite to the stage the Deputy Governor, Dr. Susan Koech, who is also the national champion for the We Finance Code, to come and witness this historic moment. I also want to invite the Governor, Central Bank of Kenya. Thank you very much, Professor. And I would also want to invite the Cabinet Secretary, National Treasury, Honorable John Badi. Please come forward to witness. Please come and witness. Thank you very much. So Lucy, please show them where to sign. So as our leaders are signing and being witnessed, I would also like you to look at the screens where we are also simultaneously flashing the logos of the numerous institutions that have already committed to the We Finance Code, and I will mention each one of them, and I request the We Finance Code chapter, Kenya chapter working group members and champions, please give them a round of applause. Number 1, 4G Capital. This is a fintech. I also want to recognize ABSA. This is a bank. I also want to recognize African Amphi Kenya, sorry. I also want to recognize Argidias Foundation. I would also want to recognize Branch International, Caritas Microfinance Bank, the Central Bank of Kenya, the Credit Information Sharing Association of Kenya, the Cooperative Bank, Credit Info CRB, Digital Financial Services Association of Kenya, DFSAC, Family Bank, FSD Kenya, please give them a round of applause. GIZ, Hope Hawi Management Consulting Limited, IRA, Insurance Regulatory Authority, KCB Bank, Kenya Bankers Association, Kingdom Bank, Metropole CRB, MCOPA, Sacco Societies Regulatory Authority, TALA, TransUnion, CRB, and Women's World Banking. Thank you very much for that. So, just making sure that everyone has signed. Lucy, please confirm that everybody has signed. To all other potential signatories in the audience, this is your invitation to also sign this commitment. So, the commitment letters have been signed. This is a confirmation. This marks the culmination of immense collaborative efforts, and we now proceed to a sequence of 3 important handovers, each carrying a profound symbolic meaning, and I would urge you to listen. So the first handover, I would request the signatories to hand over their documents to Ms. Karanja, Caroline. All the documents, please. Thank you very much. And I'll also request you to stand up and move to the left side. Thank you very much. To your left. Thank you very much. Ms. Karanja, on behalf of the entire sector, please present the signed commitment to the national champion of the We Finance Code, and that's the Deputy Governor of the Central Bank of Kenya, Dr. Susan Koech. Thank you very much. The significance of this first handover is that the CBK, through the Deputy Governor, is the national champion and custodian of the We Finance Code, and this transfer affirms the regulatory sector's dedication to monitoring and encouraging the successful implementation of these commitments. Thank you. Dr. Koech, We now ask you to hand the documents over to your principal, the Governor of the Central Bank of Kenya, Professor Kamau Thuge. Thank you very much. So this second handover is symbolic of the central bank's leadership of the entire financial sector. It shows that this commitment is endorsed at the highest level of financial oversight, ensuring that the objective of financial inclusion for women remains central to our country's financial strategy. Thank you. Finally, I would like to request Your Excellency the Governor, please hand the signed documents over to the Chief Guest, the Cabinet Secretary for the National Treasury, Honorable John Mbadi. Thank you very much. So this final act is the most symbolic, the transfer from the regulatory authority to the Cabinet Secretary for the National Treasury. So this handover signifies that the We Finance Code is not merely a financial sector initiative, but a national priority, integrated into the broader government priority and economic agenda, including the MTP IV, and backed by the highest executive authority. I would request Honorable John Mbadi to just hold the documents and show the camera people so that they can take a photo. Thank you very much. So with these powerful handovers, the Women Entrepreneurs Finance Code is officially acknowledged and integrated into the Kenya's National Economic Framework. Thank you very much. Thank you very much. So she's handing over the document that explains what the We Finance Code is. So I'd also like to request you to hold them for another photo. And in the words of Honorable John Mbadi, the We Finance Code Kenya chapter is officially launched. Thank you very much. Thank you to all signatories and our distinguished guests on stage. Please proceed to take your seats. And I would like to now invite my co-MC back on stage to take us through the next steps. Thank you very much.
Thank you very much. I will not necessarily go up on stage, and good job, and I can see you practicing to be a CS. I'll ask my strong young men to come back and pick up our tables. Now, piga picha msiende mbali, kuna kazi bado. There is something else we want to try and do, and we want to give ourselves adequate space in which to do it. We have witnessed the signing or the signatures onto the We Finance Code, and as has been said by the national champion, it was said in the speeches, it was also said just now by Ada in terms of what's going on. These are just symbolic and representative of many, many institutions that are signing up as we speak and will sign up to this code, and as has been said all morning, this is something of great value to not just the women of Kenya, but to the country as a whole and to our economy. So as our strong young men move the chairs and tables back, the reason they're doing that is because you've noticed since the beginning, we've had the two flags flanking the stage. And the reason those two flags exist is because we want to then to ask our honorable chief guest, Bona CS, if you're able to come forward again, accompanied by the governor of the central bank, by the PS, the DGs, to please come forward. We want to now unveil officially, first will be the National Financial Inclusion Strategy. So Bona CS, please come forward. You will be guided by the gentleman there to unveil that. So if you just go to my right, to our right, to my left, and your right, Bona CS, we shall have the gentleman there showing you how to unveil. And ladies and gentlemen, if you just keep your eyes on the screens, hoping there's a camera that's able to capture that, of that unveiling of the National Financial Inclusion Strategy. If you just hold, our DGs come. Madam PS, if you could please join if you don't mind. tafadhali. So, Bwana CS, we will ask you to carefully unveil the National Financial Inclusion Strategy. A round of applause, please. That is a National Financial Inclusion Strategy 2025 to 2028. And as we are in the mood, as you're still in the same mood of applause, please come to take a step to your right, to my left this time. So that is the symbolic launch of the National Financial Inclusion Strategy. You'll also notice we have unveiled the sector plan for financial services for the fourth medium-term plan, that is the MTP IV. If you can just do the same as we did earlier, which is show the documents. Like we said, it's multiple documents that we're launching this morning now, this afternoon. And so a big round of applause, ladies and gentlemen. This is symbolic, and the documents are now available to you. We'll have our ushers able to share these. You could take your seats, led by the CS and our honorable guests. Asanteni sana. So the very, very formal part of our program is almost done. There's just one more thing that I'll ask my strong young men to still do, is bring seats to the front. What we want to do is take a number of photographs to commemorate this occasion, and because the sun is quite nasty outside, we want to do that in here, just so that everyone is comfortable. So if you just give us a few minutes, I'll go back up on stage to announce the people who will be coming up for photographs. And as we're doing that, this is being arranged. I'll ask Audrey to lead the CBK choir in, as we used to call it when I was growing up, one number. Please go ahead. So these photos are commemorative for the different groups that have been involved in the various processes, and we shall be calling them up, but we'll have the choir, which has been sitting for a while, to give us one track while we make sure that everything is ready and is in position. The photographs we'll be taking, just so people are ready, we will have the board and management of the central bank, the monetary policy committee. We'll have a selection of senior staff, and I'll tell you why we have those ones coming up. The National Financial Inclusion Council for the members who are here or representative. The National Financial Inclusion Strategy Steering Committee, they know themselves. The We Finance Code Steering Committee, and the Organizing Committee. So even as we receive those books, those groups, please be ready. We shall ask you to please come up just after the choir is performed its track.
Kenya wote, Kenya wote, tusherehekea uhuru wa Kenya. Kenya wote, Kenya wote, tusherehekea uhuru wa Kenya. Uhuru wa Kenya, uhuru wa Kenya, uliokuwa kwa jasho na damu. Uhuru wa Kenya, uhuru wa Kenya, uliokuwa kwa jasho na damu. Mpige vifijo, shangilieni uhuru wetu. Kenya tuko huru, Kenya tuko huru, tunafurahia dunia. mashujaa wetu, wananchi wote tunawapongeza, mashujaa wetu, mulipigania uhuru wa Kenya kwa hali na mali, mulipigania uhuru wa Kenya kwa hali na mali. Wazalendo wote, tulinde amani, tukuze uchumi. Wazalendo wote, tulinde amani, tukuze uchumi. Tuishi pamoja, kwani sisi sote ni jamii moja. Tuishi pamoja, kwani sisi sote ni jamii moja. Wazalendo tuwapuuze, pamoja tutajenga nchi yetu. Wazalendo tuwapuuze, tutajenga nchi yetu. Uhuru wa Kenya, tusherehekee uhuru wa Kenya, uhuru wa Kenya, urembo na vigelegele, urembo na vigelegele, atushangilie, atushangilie, tuwapongeze.
Audrey and the choir. Very appropriately, next week is Jamhuri Day. So in very quick order, I'll ask that we have these will remain in the photograph. So led by Chief Guest, the CS, the PSs who are present, the governor and deputy governors of the central bank. If you could please come forward and take your seats at the center, and then we'll ask different groups to join you. So CS, PSs, and the management of the central bank. The first photograph will be with the board of directors of the Central Bank of Kenya. So if you could please stand up from where you are, come and join the photograph. After the board, once the board is done, we will have them joined by the Monetary Policy Committee. So first the board picture. So photographers, please be ready. We need to take them in very quick order. So this is our chief guest, management of the central bank, and our principal secretaries with the board of governors of the Central Bank of Kenya. Being a photographer, once I see two flashes, I know you have taken a good photo. So we'll ask the MPC to please come forward and join them. Board, board, please remain. The board remains and is joined by the MPC, and then after the two bodies are done, So let me just correct myself as guided. We'll have the board step down, the MPC step up. So we'll just have the chief guests with the Monetary Policy Committee. My apologies for that. The Monetary Policy Committee, if you could please just step into the photograph. Yep. So that is the Monetary Policy Committee of the Central Bank of Kenya. Thank you very much. MPC can step down except for David and Robert, because the next photo involves you as senior staff of the CBK. This is the departments involved with the different processes. Joined, I think you're fully briefed, Evans, Mutai, and the rest that we had briefed yesterday. Please come forward. If you could please come. Michael Eganza. So these are the various directors: the banking department, banking and payments department of the central bank, bank supervision, which is a separate department. We have the director. You can go ahead and take the photos. We have the director of the research department, the financial markets department. These are the departments that are involved in this, as well as the currency operations department. Thank you. If you could please step down. We'll then have the National Financial Inclusion Council. The members who are here present, please come forward. The National Financial Inclusion Council. And after that, immediately is the NFIS Steering Committee. So please be ready. The National Financial Inclusion Council, please come forward. Sorry, because of the different numbers of the groups, the chairs have to move in and out. Mr. Sendagi, you can come to this side. Thank you. That is a National Financial Inclusion Council, at least the members who are present. They were introduced by their chairman during his speech. Thank you. Now, the National Financial Inclusion Strategy Steering Committee, please come forward. I'll ask you to stand if you can, because the picture will be a bit too wide. Dr. Isaac Mwangi, if you could please make it quick. So please be ready for the next group as well. This is a We Finance Code Steering Committee, as well as the partners. So please come forward quickly. We get the photo. Asiyekuwapo, Nalake Halipo. So those are the three that I can see. And a few more rushing in. I suspect I should be in that photograph. But I'll ask all my colleagues, please be quick about it. We need to finish in short order. Thank you very much. The We Finance Code Steering Committee, joined shortly by the signing partners. So the We Finance Code Steering Committee, please come forward, as well the partners. And again, I'll ask you to, if you can do it quickly and stand behind the seated guests. Please come into the picture. Chironga, if you can come on this side so it can fit. Yeah, this side, so the picture is a bit balanced. If you're in this photo, please hurry. Others will cut you off. Harakisheni tafadhali. We do know that there are some people who will need to be in other places in short order. So please be quick. I will cut it off in 5, 4, 3, 2. Tamara, I'm told you have to join this picture. I have been threatened by the PS. So let me get your seat. I hadn't noticed you're in none of the pictures, so please take your seat. 210. If you're not in this picture, you will no longer be in it. Thank you. This includes the signing partners. Excellent. So the final one is the organizing committee. Maalimko, I know most of us are busy making sure that other things are done, but if you're here, please come quickly into the picture. So those that are staying, please stay. If you're coming again, I'll count it down. In fact, let me stand in the picture myself. Eight, 7, 6, 5, 4, 3, 2. Usipokuwa kwa picha utakuwa 1, 0. Thank you. The final one is with the partners. So we have the World Bank and the other partners who have been with us all through these processes. Please, if you're able to, please come forward. We apologize. I was just advised by my photographers that if it's too wide, it's not quite fitting. So I'll ask you, with your permission, to please stand behind. Agidius as well. Is the Gates Foundation here represented? Evelyn, if you can just come on, if you just come on this side, just again to balance the picture. Hold on, let Evelyn make her way. She was a member of the Central Bank until a few months ago. Asanteni, thank you very much, our guests, and thank you very much all that have taken the photos. Thank you very much. You can please take your seats. And it's very brief that they're taking their seats, because what I want to do now is invite everyone. I know we have been here since early morning for most of us. So we want to, led by our chief guest, the governor, deputy governors, the PSs, and everyone else, invite you to lunch. It will be in the tent that's right behind us. So I'll ask you just for a few seconds to allow the chief guest, governor, deputy governors, PSs, to make your way to lunch if you have the time to join us for lunch. So they will be going to the tent that's just behind to the left. And the rest of us guests, we can also make our way there. You're invited to lunch hosted by the Central Bank of Kenya and the partners. But for now, thank you very much. Give yourselves a massive round of applause. Asanteni sana. So as they make their way to the lunch place, we're also welcoming everyone else. Please go there. It's more or less free seating, and it's catered by the School of Monetary Studies, that's now known as the Central Bank of Kenya Institute of Monetary Studies. Karibuni for lunch. Thank you, and do have yourselves a good afternoon.